Good morning, guys. How we doing? I gotta post some more fucking links. Give me a minute. How we doing? Good morning. Happy Martin Luther King Day. Does anybody know what happened in the last 2 hours or so on NQ? Was there like some news or something? Maybe. Okay. I was wondering. Volume like picked up like a lot, so I was kind of curious. I hadn't seen anything. Rockets hitting ships again. Well, that'll do it, I suppose. Still kind of right where we were on Friday as far as ES goes, so not a lot of change there. Ready for the market to open tomorrow. One more day. I fucking hate 3-day weekends so much. Yeah, Yemen strikes. Did they hit like a military ship or something, or just like another cargo ship? Proxy war with Iran is super bullish, though. No, I mean, no. Houthi missile struck an American-owned cargo. Oh, okay, that's the designator. Start the questions off. SoFi has. Oh, you bitch! Really? You're gonna start my Sunday morning with SoFi? I don't see how they don't beat, but I'm nervous about IV crash. Any price level thoughts? Let me throw something at you, and this is gonna be crazy. What if they do beat? No one cares. SoFi's been promising the same shit for so long that I don't think anyone gives a shit if they actually achieve it. Oh, I mean, I can't tell you anything about what their earnings are going to be, right? So you're just asking me if it technically looks like earnings will be bullish. No, it looks like it's falling off a cliff. Um, it's in a giant Head and Shoulders. Not to mention the bank earnings Friday were pretty mixed. B of A wasn't particularly appealing. That's going to weigh on the whole sector pretty heavily. Did anybody ask Yellen about 3 simultaneous wars? Yellen will say the same thing that she said before. I will continue to issue bonds indefinitely at 3 to 6 months of duration. So if I did have 2 commercials during football yesterday, so I think bullish on earnings. Nope, believe it or not, that was all their extra profits. The important question: will Tup turn around like when they bought that or the fucking baseball stadium for no goddamn reason? The more important question: will Tup turn around and make all of Pickle Jar white in their options? So Tup filed another 8. I'll get to the memes in a minute. Let me wait till everyone's in here. Maybe this is everyone. I guess that's a distinct possibility. Nat gas dead? Really? With container ships getting attacked? Isn't the weather like freezing the fucking pipelines too, or causing condensation in them? I thought that was like slowing the transmission as well. And nat gas not dead. Nat gas looks bullish as fuck, Dork. I'm gonna buy a small out of the money call position. Okay, that's reasonable. Have you considered maybe like a debit spread so you're not as exposed to IV crush, or maybe like maybe do like an offset condor or like a butterfly or something like that, like like a skip strike butterfly. Happy MLK Day, everyone. My employer actually gave me the day off. Wait, hold on. Rims and Tims. Was it just you? Did everyone else have to go to work? Because I figured out how you can refill your port. Dude, I don't understand commodities. What do you mean? European Central Bank says no rate cuts this year. Bullish. Oh, they finally laid down the hammer on that. I wonder if there was somebody who saw that coming. That guy would be a genius. He'd be worshipped by his followers in a cult-like fashion. One second. I went to a labor and delivery class yesterday, and apparently some people keep their newborns attached to the placenta for like 5 to 10 days. Gross. That is disgusting. Probably end up being like super babies though. But don't worry, they'll be raised in a household where they believe that rocks recharge their karma or whatever. Chi. Chi. So it won't matter. You write them off as adults. I just need a small loan of $1 million and I can save my port. That's not gonna happen. Off today as well. Company changed President's Day to MLK, but both of those holidays still exist. I have CTRA. What other nat gas plays look interesting? Um, if the shit in the Middle East keeps up, Boyle. No, but there's was it UNG? What are the fucking nat gas ETFs? I know there's UNG, but there's like another okay one. Is it the UNL? I think UNL is the 12-month nat gas fund. Yeah. Yeah, UNL is the other one that's like kind of okay. I think most people would probably just buy UNG. I've been picking up I have Devon Energy, which has some nat gas exposure. I've been picking up like incidental natural gas exposure through like energy companies. Like I have BP, I have Devon, which is DVN, and then uh UGI. UGI was the other one I picked up, which was they're a utilities company, but they're also a nat gas producer. Too bad you didn't comment on what. Thoughts on Charlie D? Should I read about him? I've been watching his speech on YouTube this morning. I have no idea who the fuck that is. Cat's fine. Still spends most of his day under the couch. Chakras. Rocks are for chakra. Sand is for chi. I'm sorry. My mistake. As buyer DD, if banks can't lend when there are rate cuts, why do banks want rate cuts? Do they? Well, they don't. See, that's tricky. They don't want the rates to exceed those terminal limits. That's so when that happens, they want rate cuts, right? But when the rates start to drop away from those terminal limits, they want the rates to stay where they're at. What they don't want is the carry trade to collapse. Same like rocks recharging their Tesla Cybertrucks. Do you think DVN could see a return to above 50 with nat gas and oil pumps soon? Um, yes. It's been in a pretty steep decline. It didn't really do well when oil. It didn't do that well when oil surged last year. And I think that was largely because we didn't see any, nat gas movement at all. So if both of them move together, though, yeah, I would expect it to behave a little bit more like we saw in 2022. Their earnings have been fine. I mean, their margins have started to turn around a little bit. I think analysts have a pretty good forecast for them. Not that that fucking means anything, but it's cheap as shit right now. The dividend yield's at 6.71%. And I think it's pretty well funded. UGI is good. I've liked it so far. It's up a bunch since it was a Pickles pick, but yeah, I think so. Historically, it does pretty well and generally outperforms the S&P. Bond pit trader from the 80s. Oh god. How does he remember anything that happened? So banks want stable rates for 4 to 6 years now. I mean, it would be ideal for them. Yeah. Not that there won't be some banks that could absorb the shock of higher rates. It's just the amount of assets that would blow up would destroy the financial system. I've been looking into buying into uranium exposure. I know it's gone up quite a bit, but what else do you like besides SRF? Or is that your favorite pick of the uranium plays? I like the reflexivity between SRF and spot uranium prices, right? You know, SRF goes up, then it takes money, and then it buys more uranium, which drives the price of uranium up, which causes SRF to go up, right? So that part of it's really cool. There's a few others. There's like Kameko, and there's some miners that might benefit from continued increases in prices. There's definitely some broader like ETF exposure where you can get, exposure to both spot uranium and mining. I think UUUU or UUU is one of them, and then there's what is it, UNR, something like that. I actually think I have a small amount of one of those ETFs. I could double check that account. Give me a second. One second. Sorry about that. My food just showed up super late. Yeah, so you are I don't have a lot of it. I only have like 300 shares, but yeah, Ura. I like that one. Well, the carry trade's worthless if rates come down, right? Because then there's no spread to lend off of. PayPal's trading out. Jesus, do you get all your plays from fucking Wall Street Bets? Bob Vance, Advanced Refrigeration, 4.36 stars on Yelp. PayPal is trading at 2017 levels with double EPS comparatively. It's a value trap. That's why no one wants to buy it. It's about to break its 2-year downtrend. Once it breaks, do you think we could see 80 to 90 in 60 days? Not necessarily. um and it kind of looks like there's some accumulation. I don't see how it's not already broken out of its downtrend or its prior downtrend. That's a reversal, but like that doesn't have to go anywhere, right? That could just like fill the gap and then fucking keep trading sideways for 5 more years. Please start the stream over again. I missed the first 10 minutes. I'm not really sure I've started yet. Is it worth adding more SREF at this price or too late? Already up a load, but I'm considering adding some to the retirement port. Um, I mean, I still think that supply is not going to be equal to demand for several more years. So, um, I think the opportunity is there. Don't get me wrong, some of that value may be realized already, but it could go much, much higher. Especially if China doesn't back off of their plans to open more reactors by like 2026. So if they go ahead with that, that's going to create even more uranium demand. That's going to be what, eight new reactors in China, and I think like there's like there were supposed to be 8, I think, in the EU, but Germany and Spain backed off of theirs. So actually eased prices a little bit. And then I think the US has like four or six planned. Here's the beauty of buying BTU though, is if China does back off of that, coal prices are going to skyrocket. How much upside do you think is left for uranium? I mean, the problem with uranium is the supply doesn't meet the demand. The demand is going to continue to increase for the next 3 to 5 years. The supply is really not. So I don't see a situation where uranium gets cheaper until they start producing more of it. I mean, it's pretty simple, and it's not exactly easy to mine more uranium, and most uranium miners are way behind in increasing production output. And obviously there's a big effect from the Ukraine war on that as well, with Kazakhstan and Russia even is what, the eighth largest or seventh largest uranium supplier. So it's not, I don't think it's a situation that's going to get better anytime soon. I mean, you can't just show up with some extra uranium. Would you mind posting an update of your value port? Yeah, I'll fucking try to remember to do it this week. Can Deviant fall more? Potentially, yeah. It would be very, very cheap if it did. But yeah, I mean, it could keep going down. That would also require that oil and gas continue to drop. DRV. Hmm. No. I mean, it's a leverage product, right? So you're going to have, it's not something you really want to hold. I don't think I would use that for exposure. Maybe short home builders or REITs, but I wouldn't use DRV unless there's like news. I wouldn't use DRV. Like your dividend's going to be pretty equal to the, probably not quite equal actually to the vol decay on that fund, right? So it's not something you generally want to hold over a long period of time. Um, okay. Sorry. Uh, isn't everything a value trap right now other than Vega puts? No, not everything's I mean, the problem with PayPal is that a lot of people aren't projecting any growth for it in the future, right? I think it's got like a projection of like 6% growth by 2027, and then just really nothing after that. And there's a lot of assumptions by like bulls that buy now pay later is going to somehow benefit them in the long run, but I mean I don't think that's a very good business model anyway. They have a lot of competition, um not only for, you know, as a payment system, but also like Venmo's starting to pick up a lot of competition. You know, you got to fight back against like the banks who have Zelle, and you have Cash App, you know, which were things that weren't in the space before. And so PayPal had previously traded at, you know, huge multiples because of those things. And now with, you know, less market share, there's no reason for those multiples to continue to exist. So everybody who's bullish on PayPal is expecting PayPal to trade at multiples again. And it doesn't need to. There's no case that they're better than anybody else in this space, right? Yeah, Deviant still has some share buyback. I don't know how much is left. I haven't looked. Please fast forward 30 minutes. I'm early. I really hope for a snow day tomorrow so I can trade Fubo. Nice. Can you please go over what Greeks and IV you look at to enter new Vega plays? I can't honestly say I do all that much work picking them. It's not that complicated. You just look something for something with a lot of theta and a lot of Vega. You can calculate like the most efficient use of your money per point of Vega. But outside of that, no. I mean, just look for far dated options that aren't too far out of the money, and have a multiple of a multiplier on volatility. And then, you know, generally I'm looking at, you know, IV 30 below 13 to enter those positions. Obviously, the further below 13, the better. It's just a mean reversion play, right? You're assuming that volatility will move back to its like long-term average of 16. So, yeah, move vol to 16 and make sure the position makes money, and then the positions that make more money on that move are better. Where's Dr. Gingerballs? He said he'd be here. He'll be here fucking, I don't know, like 30 minutes or so. We're gonna go over some more stocks before we start with that. I've also heard the argument that PayPal is growing internationally, but yeah, domestic competition is getting nuts. I really just don't like it that much. I feel like not only that, I feel like far too many people have crowded into the long trade on it. How safe would you consider SPX Vega plays to be? Um, as long as you hedge them and you know, maybe sell some shorter dated volatility against them until volatility picks back up, then, you know, not too bad. I mean, nothing like that. It's still a very speculative position, but in mean reversion over a given period, like over like 12 months, you know, VIX is likely to mean revert. A statistically high percentage of the time. I think it's like in the high 80s. There's very few periods historically where we've seen VIX stay below 16 for an extended period of time. The biggest problem with them is when VIX runs, you have to start getting out of them, right? You can't, it's not something you'd be like, ooh, I wonder how high VIX will go. Like you can do that with a little bit of the position, but for the most part, you're going to want to take profits right as VIX starts to mean revert. He's too busy yelling at crypto bros. Yeah, I don't know what that's about. I also hope you had a good weekend and happy MLK Day. Thanks, man. You too. Ice Storm incoming. Can't wait to trade Fubo. Are you supposed to hedge Vega plays? I mean, you can. Yeah, you can sell shorter. You can kind of sell options against the options you already have, right? You're not gonna get a lot out of it, but wait, sell options? Yes, popcorn. Sell options. It's allowed. You're not gonna go to jail, despite what Superstock told you. Is selling SPX and bear call spreads at above Gamma Max still a reasonable income strat? I keep doing it. It's worked so far. Fortunately, the last time we moved up towards Gamma Max and actually tested it, I was able to hedge some of that off, so I didn't get blown up on that one. But I mean, very rarely there's a period where there's some risk in that play. But I think above like Gamma Max on the monthly contracts, you're pretty unlikely to ever get assigned, um, or ever go in the money. Uh, Gamma Max on the weekly contract can get blown out, but it's usually only for a few days. The problem is it's usually after those few days, Gamma Max is usually relatively higher. So that one's a little more slippery. The biggest problem there, though, is, a lot of the times, especially when the market's in a downtrend, Gamma Max is so far from spot that it's not worth selling them. I don't care about prison. Prison popcorn ain't no bitch. Biatch, I don't play. Oh, Jesus fucking Christ. Can you go over Docu for Popcorn Trader's sake? I mean, someone bought them, right? Would the Houthi supply chain block be enough to tip the scale regarding the bank situation? So yeah, this is probably something we're gonna talk about with Jay Fresh and Dork when they get in here. But I guess I could weigh in on it a little bit. The biggest issue I see is that that's the Houthi attacks on the supply chain are forcing a diversion of shipping around the bottom of Africa, right? That's Africa. So instead of all the ships being able to go through here and into the Mediterranean, they have to go all the way the fuck around. Um, and back into the Mediterranean from this side, or to the United States East Coast that way. Um, this has a tremendous cost in both time. I think this is like 14 days longer, and fuel, at an average of like it's like $2.2 million in fuel extra per ship, right? And that scales up really fast, and all of these costs are gonna have to be someone's gonna have to eat that sandwich, right? And it's probably going to be the consumer. So if it's not, it's going to be on the producer side first, right? So both of these are it's drivers of consumer and producer side inflation the longer it persists. Um, and obviously that's something we've just started getting kind of under control in the last 6 months. And another supply shock can force the Fed to keep rates higher. If rates stay higher, then we're likely to see the yields at the top end of the curve move back up. If the 10-year moves back above 4%, X number of banks are at risk. If the 10-year moves above 5%, X number of more banks are at risk, 6%, and so on, right? But what could happen at any point here is, say we move back above like 4.5%, and there was a bank that survived the last round of 4.5% yields on the 10-year, but they can't survive this one, right? And they go under and they start marking to market those assets. That can quickly raise the rate to 5, to 6, to 7, and so on, right? So it only takes one failure for all of it to come crumbling down. So I think yeah, I think anything that forces the Fed to maintain higher rates for longer can definitely create problems in the banking system. What do you think of the possibility of Fubo printing a positive EPS, given the news we've been hearing in the upcoming election, creating some good ad opportunities for Fubo to sell? Positive EPS? I think that's highly unlikely. Um, I don't even think they're remotely on track for positive EPS till like end of 2020 or beginning of 2025, right? 7 to, yeah, shorter dated is a little better because, well, for the SPX bear call spreads, shorter dated is a little better on tests of GM, but right now we're nowhere near Gamma Max. I mean, I'm not even sure a 14-day would be worth selling. 48.50 and 49.08. So yeah, I'm not entirely sure that that would be worthwhile. You see MSTR continuing to drop. I mean, it's a less efficient exposure to BTC, so probably. I mean, they're going to drop if BTC drops, and then they're also going to drop because they're going to be a less popular way of incidentally having like security access to BTC, because everyone's just going to put that money into the ETFs instead, right? I heard Israel was talking about creating a canal. Where? Israel's like about as wide as the Suez Canal. They're just gonna dig a fucking trench through the center of the country. The goal is adjusted a bit to break even in 2025, so I don't think they're targeting positive EPS in 2025 since they're using an adjusted goal here. Yeah, probably not. I don't really imagine them having a positive EPS for a very very long period of time. All I say is I need a break above 3, or I'm taking a loss on the calls I bought on Friday. Oh, that doesn't look so hot. I don't know. Russell's up a little bit, maybe, but maybe not. You're gonna need that pre-SLD pump. Do you think Yellen and J-Pow drink together, discussing how fucked they are? I don't know what they do together. Potato Tom, thank you so much. All right, I got about 20 minutes to run through some of these, and I want to go over them before J-Fresh and Dork get on here. So, GME still looks like shit, still not being shorted very heavily, but it is fallen below Delta Neutral. This should start to continue a slide down. Who the fuck knows how low it's gonna go? Maybe back on track with this. So somewhere between like $12 to $8 a share. I could see happening over the next 5-6 months, however long it takes before they run out of liquidity again. There are some vol shorts, but definitely not that heavy. I know a lot of people are still really bullish on like the Jan 19th expiration, but a lot of that just looks like swap hedging at the 127.50 strike. I don't think any of it's very meaningful. Obviously, no one's buying 127.50s, expecting them to go in the money. So, well, maybe there are some people, but they're irretrievably stupid. Anyway, there's still plenty of liquidity there. They can continue to short it for extended period of time, similar to what we saw back here, before any pressure really needs let off. So I would say that if liquidity hasn't changed dramatically, which I'm sure it has, we can expect I think about a 50% drop from where our high was, which puts us at about $9. There may be some support at 10. I would say there's probably going to be a lot of support at 10, just psychologically. Upstart continued to fall off into the back half of last week. I think Nvidia's about topped out now, so that seems to be easing some of the pressure on bots. Fintech hasn't been doing particularly well, and the bank earnings didn't really step in to provide a bull case there. So we have seen the $35 calls and the $30 calls back off a little bit, and a few more sold calls coming in at 40, 35, 30, was it 32? So there is some more call selling, and that should help dry up volatility a little bit more, and it can continue to move down. I mean, I don't know how far it's gonna go, but potentially it can move all the way down to like 18, 19. There's a lot of range on it. How far it'll actually drop is hard to say, but it doesn't look like it's turning around on the positively anytime soon. It'll probably build up a new floor similar to what it did back here until it finds support. Remember that if rate increases or rate cuts are off the table, that'll be very bearish for them, right? They do not want tight credit conditions. Bulls on this stock don't want tight credit conditions either. So as more and more evidence comes in that points to the Fed keeping rates higher for longer, the more likely this is to continue down. Fubo, I mean, we kind of discussed this. There isn't that much short interest on it yet. Not that we can't see covering, but there's just a lot for the shorts to keep shorting, should they choose to. And unless Russell bounces back really hard, there's not a lot to pressure the upside. Earnings is maybe in Feb, although I think that's a tentative date still. I'm not sure if they've announced. They probably haven't announced the actual earnings date yet. So yeah, I could see this getting shorted, maybe back down to like 220, 237, 223. Siri dropped off a little bit into the last half of last week. Still holding that lower trend. I know Buffett bought some more of this. Probably nothing's going to happen here until the merger either goes through or the merger doesn't go through between them and Liberty Media. if you want something to just like collect a dividend on and lend shares on, I think the share lending stays roughly between like 30 and 50% annualized. So there's, that's pretty decent. Nothing special, but probably why Buffett bought it. For top, we saw quite a lot of shorting into the back half of last week. And they're almost out of the liquidity that they got from the like little run back here. And they got a little more liquidity here, but I would say that's almost tapped. They're leaning a little more heavily on the ETF side, so whatever liquidity they have there, they're going to run out of that pretty soon. And despite all of that shorting, and they have been pretty actively shorting since the third. The price has continued to trade flat to up. I mean, even here, we're kind of still on the uptrend. If not having, if that's actually a bottom, then we've lifted off of the uptrend. So I don't think the situation's getting much better there. They did release an 8K saying that they're continuing to experience some delays with their reporting. I know if they don't get their reporting in on time, the NYSE will delist them. But I believe they're still supposed to have something ready by the 19th. And then the actual earnings reporting, I think they have to have done before the end of March. Have you talked about Beyond? I'm doing that right now. Beyond's continuing to be shorted. It's still got some liquidity left. Not back on reg show yet. I think we have several more business days before it can even go back on reg show. I haven't been keeping track, but maybe somebody else has. I'm still looking like 7:30 down to like 680 for entries there, or if it gets back on reg show, I'll start accumulating long positions. But right now, it's still off reg show. And let's see. Yep, I think that was I wanted to cover those on the Mag 7. So Apple recovered a little bit last week. Bounced back into that like 85 range. Seems to have some resistance at 187. 1 second, let me pull up the rest of my data on these. Still as bullish as you can possibly be on top. I mean, as bullish as I'm going to be on something that I have like $2,500 invested in. Yeah. I mean, it's just like not that important to me. All right. So Apple dealer delta climbed up a little bit on Friday, but Gamma continues to fall off. There's a drop in Charm. With about what, like 48 million is expected to fall off. Call interest has stayed fairly stable. The 185 strike is pretty strong. I would say that it's likely to just stay range bound here unless there's some sell off, but there's not a lot of momentum picking up on the call side. So, flat, I would say flat to down over the next week or so. Obviously, big swings in NQ and stuff could affect it, but I don't think it has a lot of upside range right now. There's just not that much call interest coming in. And you know, a bounce off trend and then a retest of that trend is probably pretty likely. So I think this will kind of distribute out, break down. But it may be a few more days, may not be until the week after this week. So maybe there's a good opportunity to look for like bear call spreads here. Maybe a out of the money, maybe above like 190. Maybe like 190, 195 positions for after Jan 19, so later than, because you want those to have some time in case, you know, it does bounce a little higher. But I wouldn't say it looks imminently like downside just yet. It's still trading pretty well above delta and gamma neutral. There's about a $10 range there. Gamma max is, you know, up at like 213, so probably no risk of it running anywhere near that. But I would say if it fell under 181, that's where it would start to get a little bit more bearish. And that's kind of marked with this support here. So under that support, it may be worth picking up some put options. Or selling spreads more aggressively. Amazon. So Amazon is about 159. Amazon's about $5 off of Gamma Max right now. Call Delta, dealer Delta fell off a little bit on Friday, but not very much. I would say we may be starting to see a shift in momentum here, but it's way too early to tell. So this is another one that's kind of run its range and is starting to fall, or well, at least starting to fail the resistance. I would say unless there's some sort of news or something like this, then yeah, this may be another one where you want to sell. You want to sell above that GM. So what was that, 158? And, you know, bear call spreads to the upside of that might be worth it. Except I think this one's turning around a little faster than Apple, and it tends to be a little bit more options driven than Apple. So it may be worth taking some of that credit and possibly picking up like a speculative, like out of the money put. Maybe something with like 30, 45 DT. Because this, I think the support here is not quite as good as it is on Apple. And if it does fail, it could fail a little faster. Gamma neutral here is at like 140, so you know, rejection on gamma max into a test of gamma neutrals, you know, almost a $19 range. You only have $2,500 invested in top? Yeah, I have some like $500 in the money options and like $2,000 in out of the money options. Why would I put more into it than that? I had like 10K at one point, but then it ran to like 250, so I closed it all. Although I may pick up more. Like I said, I would pick up more if it fell to 180. It just hasn't done that yet. And above 2, the synthetic longs aren't really very attractive. Here late and listening at 2x, hoping everyone's having a good MLK day. Thanks for the stream. No problem. Hope you are too, Jen. Okay, so Amazon, kind of a similar situation to Apple. I think we're gonna find this to be true across most of the Mag 7. AMD, not really part of the Mag 7, but we'll cover it anyway, since my last call on it was so spot on. Okay, so AMD finalizing its rejection from above Gamma Max. Delta and Gamma are falling. This could be an opportunity to take a longer dated put position or a debit spread targeting like the 138 level. Might be beneficial. Generally speaking, after extended tests of Gamma Max, as AMD has seen here, it fails pretty spectacularly. Usually a lot of profit taking. I think investors aren't too certain that they're gonna be the AI powerhouse that the market's hoping that they are. And pretty decent drop off in charm from last Friday too. So a lot of near dated positions falling off, and a few of the longer dated positions as well. It's still bullish above 139, but there could be a play in just trying to play the range between the rejection of GM, which is at 148.50, to 139. So it's about a $10 range. That might be worth picking up like a debit spread on. I probably wouldn't go out more than like 14 DTE on that. And then if you really wanted to play like a continuation further below 139, like a test of gamma neutral is down at like 120 right now. So yeah, a mean reversion back to gamma neutral would be quite a large move. You'd probably want some time on that. Also, opportunity to sell above Gamma Max given its proximity. It has exceeded Gamma Max a couple of times in the last few weeks. So I would be careful selling right at GM, which again is 148.56. But above it, like a little bit of range above it might be safer. Don't worry, I'm here. You can start the stream. Thanks, Dork. Oh wait, it's Carl. Never mind. I thought you were Dork for a second. Let's see what's next. Google. All of these are going to be in roughly similar positions. Like they all still have a little bit more upside range on them, but not a lot. Yeah, Google just short of Gamma Max. Gamma Max is at 148.11. Doesn't get bearish until it falls below 136.79. There's definitely, again, there's a mean reversion play from Gamma Max to that, I'm sorry, 136.80 level. GN and DN are very, very far away from spot. I will say that Google did not see the drop off in dealer delta that we saw in AMD and Amazon. This one looks a bit more stable. Charm is continuing to increase into the monthly expiration. So I would say Google's probably less safe to play than either of the other two. There's a lot more risk that it will continue up and possibly test Gamma Max. So that one, test or exceed Gamma Max. So that one I would probably stay the fuck away from this week. It doesn't look very safe for covered calls, and it doesn't look very safe for puts. Although above Gamma Max or at a test of Gamma Max, that may be a little better opportunity to get a put entry on it. Let's see, Meta's super blown out right now, I think. So yeah, Meta is very similar to Google. Not a lot of decline in call side interest. Not a big drop off in charm. Gamma and Delta are pretty flat. Um, Gamma Max is still out of the money, 387.22. Honestly, this looks like it could just keep going up, and maybe the strongest like beneficiary of any Mag 7 or tech pumps that we see this week. Um, given how much range it has to the upside, uh, I wouldn't short that one at all. I'm not sure I would want to go long on it, but maybe over like the next 2 days, depending on index momentum. You know, if indexes are performing well, we may see Meta perform pretty well also. Microsoft, let me pull out a little bit here and go back to like the daily. I have 193 marked. I don't know what the fuck that is. Microsoft saw a big upswing in call interest into the end of last week. That actually may continue out into next week. That's a ton of interest. Over the last 3 days, dealer adjusted gammas tripled. Well, like almost 3x. So, and then we got a little bit of a drop in gamma on Friday with short dated shit falling off. What we are seeing is Vega exposure drop as well. So it may be that we're seeing some short puts on Microsoft start closing out. Gamma Max here is 395 now. Oh, that's what that line was. That was supposed to be Gamma Max. So this is up here at like 395. Yeah, this is actually probably pretty bullish. I don't know how much range it'll have. It's pretty rare for Microsoft to exceed Gamma Max, but it has tested it a few times over the last year. Notably in June and in July of 2023. So yeah, I would say that a test of Gamma Max, maybe slightly above, is possible. So that one looks a little bullish. Also, Microsoft not heavily driven by only its options chain. Netflix, which is one I'm sure a lot of people have questions on, still has a shitload of range to the downside. Yeah, that really hasn't changed. And honestly, like not a lot of the upside moves over the last week on this have been driven by its options chain. There's been a significant amount of buying in the underlying, but very little change in any of the dealer interest. There was a big surge of buying on Thursday, but most of that was short dated. That started to fall off already. Gamma neutral here, still around that 470 level at 467.92. Delta neutral down at 426. So still a shitload of range open to the downside. Gamma Max is at 515, not very far out of the money. And I think most of the sold calls that we're pulling back have pulled back here. So it looks like a lot of that's already squeezed out. There may not be as much upside potential for this, but it still needs to fall back below 475 to really pick up that downside momentum. 475, 470, and then 465 are all very, very important levels. It does have a double top. It did fail both tests below that long-term trend. I would say if we see volume start to pick up on a downside move, that would be a good indicator. hitting that 475 level is really not that crazy. I mean, it's only like a 3% drop from where it's trading right now. So it could easily happen. And then ideally below 465 to confirm, a continuation of a downside move. So it'd be this test, then this test, then this test. And then if it fails all three of those, it can go all the way down to delta neutral. But that may take a little bit of time. Make sure that if you have stuff on it, it's not short dated. That's probably about it for that. Nvidia is going to be tricky. Nvidia is massively blown out Gamma Max. I don't think Gamma Max has caught up to spot yet. A little bit. Okay, so Gamma Max passed spot on Friday. Gamma Max now at 552.50. There's nothing really bearish here until it falls below 500. I will say that there has been a lot of accumulation of short calls at 550. That may have some effect. Delta has started to fall off. Gamma started to fall off. It lost a huge amount of charm on Friday. I think like 500 million in charm fell off on Friday, but bot call interest only dropped a little bit. So there's still a lot of calls there. It could still rally again, although it is starting to fail the top. Someone had also asked me to go over Airbnb. So Airbnb kind of still consolidating in that wedge. It did have that one breakout, although I don't think that matters. So Airbnb below 136, which it's got to be kind of close to, right? Yeah, below 136, it'll start to pick up some downside momentum, and then you're looking at 134 and 133 to confirm a breakdown. I will say this doesn't look very good. Gamma on Airbnb has fallen negative as of Friday. Dealer Delta remains negative. Short put interest has been pulling off over the last 3 days pretty quickly. There's very little charm, and call side interest is starting to fall off a tiny bit. So this may be the second lower high, maybe a good entry for an at the money short position, maybe targeting that test of GN, which is about $3 away, or targeting the test of DN if you had a little bit more theta at 133. Remember that this Airbnb really, really likes to bounce off of gamma neutral, and when it does, it tends to be dramatic. So I would be careful of that. But yeah, it looks pretty bearish. C3 AI, yeah, I could cover that. That was a Pickles pick last week. Just some put interest. I actually missed the at the money put. Ended up in like 25s, but yeah, it was fine. Yeah, dealer delta is continuing to fall off. Gamma still positive, but almost shifted negative as of Friday. It is below delta neutral, but above gamma neutral. This is a pretty common theme with this stock, that delta neutral tends to stay just a little bit higher than GN. Probably due to the accumulation of like longer term options interest on it. So there's not a lot of short dated options plays on it. There's a lot of like long dated like leaps and stuff like that. And that's I mean that's been the case since I think like, when did it really climb over? That maybe always the case. It's always kind of been the case on this stock. have been very few instances where gamma neutral is short dated options have exceeded the near term ones, which is interesting and might tell us something more, but I'll have to look into that. Yeah, for the last like 3 weeks, we've seen short put interest pull back pretty rapidly. Charm is negative, so dealers selling the flat tape here. Call interest, bot call delta has almost dropped negative. It's not quite there yet, but it's getting close. If the next big test for this is at GN, which is 2416. And then after that, Vega neutral at 22 falls below Vega neutral. The is then short delta, gamma, and Vega. It'd be hard to stop a drop off at that point, frankly. Once the starts going long Vega, it gets pretty ugly. So I think that one's got some good potential to continue moving down. I know I picked up, I think, a decent amount of theta on it. I got like Feb puts. So I think my target for that's still in place. Obviously, if you're not in it, this isn't a great entry because, there is resistance just like $1 out of the money. This actually closed lower, I believe, in after hours. It dropped lower in after hours and then climbed back up a little bit. But yeah, if you're not in this already, the range is a little bit more reduced. I mean, you only have like $2 of range to the test of GN or DN rather. That's not so hot. Oh no, that is GN. Sorry, GN. So this may not be worth entering anymore, but if you're already in it, it looks like it's on track. All right. ACN, if I have the Greeks for it, I don't mind. So ACN's testing Gamma Max right now. Looks like Delta's kind of starting to flatten off. Well, adjusted Delta's kind of flattening off. Big drop in short puts over the last 3 days. So that might be indicative of a reversal. Gamma's still positive, but dealer adjusted delta and gamma are both still positive. There's a bit of a drop in call interest on Friday. It is at gamma max. It does not frequently exceed gamma max, although it has exceeded gamma max in the past. Doesn't get really bearish until it's under 336.53. I'm thinking about dumping my position. Well, it's not a terrible price. I can say that much, at least historically. Yeah, no problem. All right, let me see what the boys are up to. What's up, guys? Wait, can you hear me? No, there we go. That's me.
How you doing?
Doing all right. How are you guys? Sorry that took so long.
Good.
Had a lot of stocks to run through.
It's cool.
It's all good. We're just doinking around.
Got any good ones?
I kind of liked the look of the short on AMD. I don't want to go anywhere near most of the Mag 7 besides maybe selling some calls or like some like out of the money spreads. I don't trust them over like the next 2 days. And then I don't know, Tup's really kind of fascinating me. I don't understand what's happening there. Like it doesn't make sense. They're using shitloads of liquidity, right? Like they're drying up all the liquidity as we would see with heavy volatility shorting or heavy shorting, right? But the price of the stock keeps going slightly more up. So that whole thing's really confusing. I think they're trying to like just hold on for dear life until Tup makes some kind of actionable announcement. So I think the shorts are just kind of like
till the markets just tank again.
Yeah, I don't know if Top has enough. Like, actually, I don't think it has any like index exposure really. A little bit, like it's a micro cap, but I think it's got very little ETF exposure. And yeah, so I like the last time the market dumped, it didn't really do much to the price there either.
Yeah, that's the thing about these indicators is that, I mean, there's one of two reasons why they could be telling you stuff, right? One of them is because the underlying's illiquid. The other one is because the secondary market is illiquid, right? So, I mean,
True.
it could be telling us that micro cap indexes are losing liquidity, right? And so that's why you could be seeing this loss of control on top, is just because the availability of, of shortable shares in the ETF is going down.
Well, well, yeah, but
Here's the real question.
that's the
What
same
is
thing, right?
what is the risk that TUP will go bankrupt in the near future?
See, they refinanced their debt, and arguably they should, if they could find an accounting firm to manage their books, which seems to have been an issue lately. But if they can, and all of that goes through, then they should be fine. I mean, like they have
I'm
some
out. I'm not
distribution
interested.
deals.
I'm not interested unless they're
Unless they're going
highly
bankrupt.
likely to
Oh,
go
I'm
bankrupt.
sorry.
I
Well,
mean, restructure their debt says bankrupt to me.
if you really want to know, if they're unable to release their earnings to the NYSE by the end of March, they will be delisted. So now I've got you back in. See, that's all it took.
Delisting risk.
Yep.
I'll have to think about this.
Sick bastards. Kirk, I remember when you first came to me with TUP, and I said, I hate this. I hate it so much.
Yeah, I do too. I do too. But then it ran to $7, and you probably hated it a little less.
I hated it even more.
I mean, I've made money on it. Like I'm positive on my positions on it, but
This seems like Revlon 2.0.
It sucked holding it every single time. Well, so with Revlon, there was a very small float, right? Like they weren't able to actually cover anything because the float was like 4 million shares, and so the volatility kept spiking like crazy. And that was really like the initial play on Revlon, was that you'd buy these like out of the money leaps, and you'd just make it. Fucking IV would go to 500, because somebody bought 100 shares, and then you'd sell them. But yeah, this isn't quite the same.
All right.
There are some similarities. What was interesting was that it ran really hard last year. It ran from like 50 cents to like $7, right? But the shorts didn't cover anything. Like they immediately shorted it all back down. And now they're sitting on all those shorts, hoping it doesn't run up there again.
I just think shorts don't care. I think they're pretty confident that Tupperware is going to go bankrupt, and so they just kind of just don't give a shit.
Well, they're going to care a lot if Tupperware isn't going to go bankrupt immediately, though, right? Like there's a big problem with being too early there that the shorts would definitely care about a lot.
Yeah, I mean, well, especially so what's probably happening with it is some sort of like creation redemption mechanic that requires that there's a lot of TUP bought. But once that's done, right, then they just go right back to shorting it, and they get the opportunity to fade the top yet again, right?
Yeah. I'm not arguing that, but there are a lot of shorts between $7 and the current price that can go underwater really quickly.
They certainly can. Don't worry, they'll short more treasuries to pay for it.
Have you tried calling them and asking if they're going bankrupt? Their revenues aren't bad, balance sheets shit, but they were trading at like $20-$25 before.
What's the like thesis on the business side. Like, does anybody care about the name Tupperware anymore?
I don't give a flying fuck.
Yeah, I was just wondering if it was even relevant. But
I mean, I think they sell it at Target. It's considered like higher end than buying like Glad or something like that. I think they make their products are like BPA free or whatever, you know.
I feel like over 90% of this market gets their Tupperware from like old containers of lunch meat.
Yeah, yeah. The like Glad containers. Although
Yeah.
I'm gonna reiterate this for anybody who missed it the first time. Nobody should ever be eating lunch meat that comes in a plastic container. Ever.
Well, I mean, even the good lunch meat comes in like a plastic wrap that they have to cut off.
Well, it's like comes in like a little bag. Like a little Ziploc bag. But I'm talking about like the Jimmy Dean lunch meat that's in like the refrigerator section. That's just like
Hillshire
recompressed.
Farms.
Yeah, like recompressed meat into a loaf that they give you slices of. That's not ham.
Yeah, it's like glue. It's like meat flavored glue. It's delicious.
Meat flavored glue.
Oh God, I wish
That might
you'd
be the name
never.
of my next punk band.
I wish you'd never said that. Anyway, yeah. So that was those are the only. That was the only one that was really compelling. Upstart looks like a wet bag of shit. That's probably gonna just keep dropping like a rock. GME, same deal. I haven't really looked too much. C3 AI looks pretty bad. I went short on that last week. But the Mag
AI is going to revolutionize the world.
No, it's not. But the Mag 7, yeah, I mean, Apple kind of looks like the most. Apple and Nvidia actually look the most bearish out of the Mag 7.
Man, Apple's just
and they both look
train.
fine. Yeah, that's my problem with them. Like, I don't know. I'll probably sell credit spreads on Apple again, but I'll probably get blown up.
Yeah, they just seem unstoppable. I don't know what it would take to make Apple dump at this point.
It just
The
did.
news has been so obviously bad.
Let me tell you a story about
it just
a
dumped.
time past.
Yeah,
So-
but I mean, we're putting that in the context of it was trading at like 135 when it had better technicals.
Yeah,
like a year ago.
Yeah, that's true.
So let me tell you a story about back in the day. Okay, the year is 2006. Okay,
Okay.
and someone approached you on, you're a Wall Street guy. Someone approached you and said, "Hey, look, I know this BlackBerry is really cool and all, but Apple is about to take over a majority of the market share for phones. What do you think that Wall Street guy would have told you? You're on crack. That's never going to happen."
Really? I feel like I believed that anybody who could get rid of buttons on a phone back then was gonna win.
If you look at
Like,
the
do you
news
ever
from back
remember
then,
selling like sending a text on like a Nokia or like a Motorola i90?
Oh yeah, well, dude, the BlackBerry keyboards were the best though because they had 2 letters, so their predictive accuracy was crazy high. But like you could type so fast on a BlackBerry keyboard with the 2 key, but if you look at like the newscasters and just the general consensus of the public, even when the iPhone was released, people were like, "What the hell? What is going on here? This is And
Wait, so are you trying to make a case that their current like face goggle contraption is going to be the next iPhone kind of thing?
no, what I'm saying is that Apple's probably gonna not be the face of the next cool thing.
Yeah.
That's believable.
And once that happens, they're going to tank. If they lose if they lose their market share of whatever personal interaction device, they're done.
Have you seen the flip phones from Samsung? The new ones.
Yeah.
The like seamless ones with that's a phone and a tablet. That's gonna kill
Yeah.
Apple.
I mean, those things are still It's still a work in progress. I did have a dream last night though that I had like a 45-inch TV that weighed like a pound, and I
And you
could just
just
like
kept it in your
flop it
pocket.
around.
So the next big technology is AR. Someone's going to make some glasses that run off an iCAD, and that's gonna break everything.
Yeah, but I feel like didn't Google and now Meta, aren't they kind of trying to do that?
I can't wait for
Microsoft is
videos of people in public going full Minority Report on shit that no one else can see.
yeah, oh yeah, it's gonna be the future.
Just like Minority reporting the best price per ounce of cereal in the cereal aisle.
Yeah. Just some mom just like, that would be funny.
Like,
Oh my
like
god.
so Google tried something, but the technology still just isn't there yet, right? Like we need more efficient electronics, a better way to do the fiber optics required, and then a better battery that lasts a long time and can go through a lot of duty cycles, right? But that's gonna because once you can make that those glasses into a phone and make it so they're gesturable with just your plain hands, right? You no longer need a phone in your pocket.
I think I think people like having a device. I don't know, because like
Do you have it
I
on your head?
mean, people like the Apple Watch, which is supposed to sort of augment and replace some of the features of your phone. But
Why isn't the Apple Watch like a full like piece of armor? You know, like why isn't it the full forearm?
The
That's
Apple
what it
Glove.
needs to be. The Apple Watch needs to be the full forearm, and then it flips open into an iPad.
No, you see now you're getting back into the intrusive space. I'm saying we like the minimalist sort of
Apple
approach to
Iron
technology.
Man.
yeah, but I think the issue that I'm trying to make is that I don't know. I mean, I know a lot of people who own Apple Watches. I mean, my wife even has one. I don't know that I've really seen or heard them talk about any sort of replacement activity that's actually occurring with the phone. Even though you can like text on it, you can make calls on it, like people
Well,
still
because it's
just
a
take their
tiny ass
phone out.
little screen on your wrist. I mean, it's kind of there, but no, I'm talking like something where you can replace, a 40-inch desktop monitor with a pair of glasses and have a keyboard, augmented into your environment, or you can do like swipe or something or handwrite. Like that's where things are gonna go. It's just the technology just isn't quite there yet, and especially with like electrochromaticity, you could even do like opaque screens, right?
Yeah, I mean they already have. I mean Samsung, I think recently had a what's a
Mini-
transparent display.
Yeah, yeah, that's getting there, right? If that can get miniaturized and made efficient, then yeah, game over.
I don't think there's any reason why it couldn't. I'm assuming the way that they do it is they use relatively colorless plastics that then, when they apply the voltage across it, it emits a certain color of light. I imagine that's got to be pretty hard to do, but not impossible. And then they just decide what fraction of the transparent surface is going to be those things, right? And so there's no reason why that couldn't be put into glasses or anything else. It's just like any other screen technology.
Yeah, but but I digress. I'm just saying that if Apple was going to tank and actually go down for a while because they got disrupted.
Yeah, here's the first thing I thought of when I saw this transparent display that Samsung made. Take a bunch of them, stack them into a volume, and then you've got a 3D display.
Mm,
That'd be pretty cool.
that'd be like a whole better way of looking at vol surface.
God.
I
Oh
was
my
thinking,
gosh, we could
We
look
could
at
just
tiny
dive
vol
into the
surfaces.
surface of the vol.
The popcorn, the surface of the 3D display is so that you can recreate that one scene from Star Wars.
Mm.
yes,
And you put it in your theater room that's all like Star Wars themed, and you just have it playing that little like robot thing of Princess Leia, just being like, "You're my only hope," and that would be the coolest theater room that a white guy could ever have.
1 second, I'll be right back. You guys keep talking about white guys in theater rooms.
Yeah, I was
I
thinking
mean,
along the lines of the weeb and putting your waifu in 3D.
oh yeah, yeah, just go nuts with it. Yeah.
Yeah, I saw some of the technological things from CES or whatever it's called, and some of them are pretty cool. But like I didn't see anything that's like that blew my mind where it's gonna change everything.
No, I mean, most things are pretty incremental, right? And then the crazy stuff, most of it looks crazy before it catches on. There were a couple things from CES that were absolutely ridiculous to me. Did you see that thing called the rabbit?
Oh yeah, that thing was the dumbest shit I've ever seen.
Oh my
Is
god!
that
It looked
the is that the like
like the
AI
orange. Yeah, it's like the
AI
orange.
Tamagotchi?
Like, yeah, it's got that
It's a
little.
money
All I could
extraction.
think of, like that little mechanical turn wheel. All I could think of was like those little toys for babies, where they have like the wires and you move the little shapes along the wires on the wire maze. It looks like a play school toy.
Oh, like the things they have at pediatrician offices?
Yeah.
I don't think they have those anymore because COVID.
I mean, there's so many. I mean, where would they all go? They've got to go somewhere.
They went into the rabbit.
But yeah, I mean that thing. I don't know. Between that and like the humane AI pin, it's like a Star Trek tricorder that you push on your chest or whatever. Um, I think yes. I think a lot of people are thinking about how to change the phone. Um, but in terms of functionality, like what is it actually functionally allowing you to do, right? Because the phone allowed you to interact with the internet everywhere, right? I mean, I think that was probably the biggest allure of the phone is you could do everything that you could do sitting at your computer. Now you could do that anywhere. But with these new technologies where they're just trying to change the user interface, I mean, it's still not really elevating that, right? I mean, I don't think people have a problem with staring at their phone. They love it. They can't get enough of it.
Yeah, if you look at game revenue, mobile game revenue outpaces everything else by like a million miles.
And
Yeah.
then if you've ever
Anyway,
played a mobile game, you'll sit there and wonder how.
yeah, they're all pretty minded. I mean, I don't know. I play mobile games sometimes. It's kind of like a fidget spinner. I don't really pay any money in them because, like, what's the point? You just get the games just go on forever, and eventually you just lose interest and go to a different button pushing game. But it's just like a fidget spinner. It's just a nice way to not think about anything else. But yeah, the other thing at CES I thought was hilarious was, and everybody, like people on Twitter are going nuts about it, a really big dehumidifier.
Oh yeah, I saw that. Yeah.
but they're selling it as like you can make pure water from the air for your home, right? So the
Oh, I
idea would
saw
be
that.
like
Yeah, it's just a big
the idea would be like
dehumidifier.
you'd put this massive dehumidifier next to your HVAC unit outside, and at least like 55 gallons of water a day or something, so you could I don't know, I guess that seems like enough. I mean, most of the water is the shower, and that doesn't have to be
You could
pure.
flush your toilet 10 times.
But it costs like 20 grand, and it's just a huge dehumidifier. Why would you flush your toilet with the pure water? Why not just use the city water? That's silly.
So
Dehumidifiers
the
use a
funny
shitload of energy too. So like,
I
how
know.
is okay?
so the funniest
It's
thing
a
I
really
saw
stupid idea.
Why is everyone
the funniest
acting like it's like they invented like a new way to filter seawater or something?
I don't know.
yeah, everyone's
Yeah,
just
if
trying
you
to
could,
on something. So I saw Sony, the Sony CEO or something, controlling their EV with a PS5 remote. I thought that was hilarious.
Hmm.
yeah, why not?
Well, it's because I mean that couldn't go horribly awry.
Cross-platform marketing.
I mean, I'm a better driver on a PS5 controller than I am with a steering wheel.
There were also a bunch of things at CES of like little like AI companions, like little ball and like little puppies and things that run around your house and like schedule meetings for you or something. Like that was a big thing. I need somebody to schedule all my stupid.
I was going past like 30
home.
Rock the other day, and like that's you guys know what FAO Schwartz is?
Yeah.
Okay, so that's where they've moved the new like FAO Schwartz location, and the front window was just like full of like various AI pets for your like lonely city children,
Oh my God.
which is wildly disturbing.
So Furbies.
Yeah, but even creepier somehow.
Yeah.
Furbies.
Dude, Furbies are hilarious. They're creepy as hell, but they're fun.
They were fun until Gremlins came out and gave you nightmares about them.
I think Gremlins predated the Furby.
Yeah, I was gonna say the same thing, didn't it?
I forgot about it.
I wonder if there's like a copyright thing.
I was too young. My temporal alignment of all those things is messed up.
Speaking of Furbies, have to remind you all of the long Furby community that exists and is a thing, where people on Etsy and other places will actually make Furbies that are really long and usually
Can we
really
not
creepy.
fucking bring that back? All right, we already.
So if you've never heard of a long Furby, there's your rabbit hole for the day. Get on Google and get going. There's a lot of great stuff.
There's nothing good. Nothing good will come of this. Moving on.
Yeah, we got to talk about something important.
Do we?
Well,
we don't.
who wants to? Jay Fresh, do you got some pool stuff to talk about, or do we want to actually talk about like something money related?
I mean, I drained my pool. It's like 26 degrees here, and it's gonna get down into the teens tomorrow, I think. So
All right.
I was gonna try to just power through like an asshole and just run my natural gas heater just continuously for 3 days, but it just was getting too cold, and I didn't want to risk it.
You should have put the
You power
like
wash your
solar,
pool?
like the solar cover on, and run the nat gas heater simultaneously.
Yeah, or just turned it all off. It seemed easier.
Yeah.
You could just park several cars around it, and then put in like a bubble, so that way the greenhouse gases keep it melted.
Now the only thing that you can't weatherize, and it drives me crazy, is the backflow valve to like the city water. So like every pool has to have a backflow prevention valve. So like if for whatever reason the city has to do something with the municipal water supply that lowers the pressure of like turn off the water to the city for whatever reason, then now you have pressurized water running through your pool and there's no pressure in the city, and so it starts pumping pool water into the city, and that's a big no-no. They don't want it to go backwards, so everybody has to have these valves, and there's no way to prevent these valves from breaking. You can shut it all off, but unless you shut off the water to your house, which I don't want to do, something's gonna freeze and burst in this thing, and it's like $150. It's really annoying.
Yeah, big pools trying to extract their money with this great big conspiracy. That's what's happening.
Yeah, it's big pool.
Fuckers.
Oh yeah.
Well, no, I closed it last year during the freeze because the first time it broke, it just busted like the diaphragm apparatus on top that's actually preventing the backflow. So I was like, oh, I'll just close all the valves so it can't build up pressure. And then I successfully saved this diaphragm assembly, but then it just broke the valve, which was infinitely more expensive and more work to replace. So now I'm just leaving it open and letting the valve bust.
My
Or
pool's
letting the
in like effectively in a giant greenhouse, but it's just full of mud and seawater.
Are you? How's the shrimp? How's the shrimping?
I haven't started shrimping yet, but I do have a new layer of seawater that's seeped in from like the beach. So there was like a period of fairly high tides, and I guess the seawater just pushed in through the groundwater and also permeated the pool. So now my
Is the
pool's
pool
like half
empty?
full. Well, no, it was empty, but now it's
Was it?
half full of
Yeah.
mud
Okay.
and
Yeah, I should
seawater.
have told you never leave your pool empty because of the ground pressure.
Oh,
You got to leave the water in the pool to offset the pressure from the outside.
fuck.
Yeah. Sorry.
Well, now you got a perfect estuary to grow shrimp
To
in.
be fair, I think the pool was cracked long before I ever got it, but
Yeah, you
the
probably got it.
greenhouse
Yeah.
is super cool because the seawater and the mud in the pool quite warm, despite it being like 28 degrees out.
I mean, it's the perfect. You're either gonna grow some beautiful shrimp or a bunch of mosquitoes.
Well, I don't think the mosquitoes can live in the seawater.
I don't know. I don't know enough about mosquitoes. Probably not.
Fill
Well,
your
Bubba
pool with
Gurley's coming out next year.
pudding. Thanks, popcorn trader. That's a great idea.
That's the solution.
Well, do you want to kick off? Did the viewer count drop enough?
No, I think we picked up more people again. For some reason,
It was,
people.
you know,
Is it better or worse?
it was over 320, almost at 320 at one point. It's kind of flattened out at 300. Usually it's like
Yeah.
260 though.
Yeah, usually when I was still talking about stocks, it was at like 332. So we've lost about 30 people, which is
That's good. That's
10%. Yeah,
10%.
that's not bad. So
All
now
right,
I
cool.
guess we could, but they'll come right back. That's the thing. It's like they're always just waiting.
Maybe we should throw intermediary like tangents off in the middle, like they do on all those podcasts, where like you go off on like this 30-minute tangent in the middle of what you're saying.
Yeah. Instead of starting with the tangent, just work them in.
Work them in, yeah.
Okay.
That'll help suppress the viewer count throughout.
That'll also help smoothly transition into product placement in our discussions.
Do we have products to place?
I mean, we just placed long Furbies. Etsy long Furbies are going to start flying off the shelves.
Shit. Yeah.
You think I did that for free?
I had assumed that you had, but now I'm questioning everything.
All right. What do we want to talk about? Macro? Dork's got a bunch of charts.
I can go over my stuff first, or JFresh, if you have anything fun you want to go over.
I mean, I was just going to rant about the Bitcoin ETF for a while, but we can do that whenever.
Why are you telling Bitcoiners about how ETFs work?
Because it brings me joy.
You're going to start more cults. You know that, right? And they're already part of a cult, so you're going to get like, you're going to start like tangential Bitcoin super stock cults.
Yeah, but I don't think you can stop that, right? I mean, like the big joke in like the evangelical church community with like all the different types of evangelical, you know, they make a joke that the primary difference between all the churches in the same, you know, city block are fighting over what color the carpet should be. Because they all basically think the same thing, but have really minor differences.
What is the evangelical carpet color of choice?
It could be anything, right? Oh. Anything. But some have patterns.
That's crass.
Yeah.
Tacky.
Can you talk about Sherwin? I don't know anybody named Sherwin.
I think he means the paint company.
I know what he means.
I can give you some anecdata on Sherwin.
Oh yeah.
Sherwin prices,
did you go spend too much money there?
No, but Sherwin, I've been told by others who've had to purchase Sherwin stain that it's up like 30% more than competitors. Like they're just driving prices up. So
there are no competitors.
Well, I'm sure in terms of quality, probably not, right? I mean, I would say go for it. Just buy them. They're raising prices like crazy, and so they clearly have some pricing power.
Yeah.
Every single HOA in the state of Texas
The last
has
time I
some
went long
has
Sherwin, it was $240.
I could tell you this: every HOA in the state of Texas has some color of Sherwin-Williams stain built into their bylaws, so that everyone has to use it. It's the weirdest thing. So go nuts.
All right.
It's like by law, there's just a ton of customers.
Well,
My
they're
lips.
covering the world in paint, don't you know?
Like you legally have to buy Sherwin-Williams.
You guys are just trying to get me to play with my lips. My lips are only red as fuck when they're in the lower part of the camera, like down here. And then when they're up here, they're normal colored. See, it's the lighting.
People talking about your lips. This is such a weird group of people.
It really
Yeah.
is.
This is really shaping up to be a great episode.
I like it.
I'm actually really enjoying this one.
Yeah, Sherwin looks like it's right on track to go back to 320. The stock is unkillable.
I mean, yeah, why
Yeah,
would you? You're like legally obligating a massive amount of people in the country to buy a Sherwin-Williams. Like it's
Yeah. You want to build houses? Sherwin. You want to paint other
legally
shit?
required to go up. Like it's yeah. Go for it. Go nuts.
I remember back when we were playing it in like 2022 and shit, and God, I made so much money on it. Like every time it would drop, you just buy it, and then it'd fucking go right back up again, like $100, $150.
Kind of a precarious looking shape here. Maybe you could get it better. I don't know.
Well,
Everything's kind of went straight up for a while, so
that's the thing is it's like hard to pick stocks when everything is just up, right? You're fairly reticent to just buy shit at near all-time highs, especially if your economic outlook isn't as good as or as rosy as the market is currently pricing, right? It's a tough time. But so anyways, to talk about that economic macro outlook, I
Ooh.
dug through a giant table of data from the whatever it's called. It's like the H dot something.
Oh Jesus Christ! You have so many charts.
I have a lot of charts, but there's a couple I would like to focus on.
Okay.
I just put them all in there because we could, we cover a lot of topics here.
Oh wait, should we talk about my super awesome DD first?
So the top three charts are perfect for you to sort of supplement with your banks are fucked DD.
Banks are fucked.
Yeah, these explain it pretty succinctly too to help you out. Because you talk about how they're still sitting on gigantic piles of hold to maturity security losses,
Yep.
right? And when they go above a certain point, they get hosed, right?
Boom.
So I put up the chart of the amortized cost of these hold to maturity securities. So this is like how they're priced, like at payout.
Mm-hmm.
And it's just I found that fairly interesting that from 2011 onward, it's just exploding, right? Probably something that has to do with deficit spending and all that weird stuff.
yeah, absolutely deficit spending. Yeah.
And then the next one is the balance sheet of mortgage-backed securities. That one I found really interesting.
That they're dropping?
Whoa.
Well, yeah, because if you look at it, even through the great financial crisis, they never really dropped. And yet now they're experiencing this massive runoff.
Yep.
So that was very interesting to me.
You gotta cover those margin requirements in Japan.
Yeah, no, it's super weird. And then the next one is the municipal securities, which also I found very interesting. And this might be a tale of relative numbers. And
Wait, why don't my taxes all go up on my property if this is going down? What the hell?
Well, that's why your taxes are going up. But the municipal one, yeah. So there's a little bit of chart crime because I'm not using a log chart, but there was a huge runoff on that heading into COVID, and
Mhm.
then now, right? So
Yeah.
that one is very interesting to me too, because this sort of tells you that there's obviously less interest in trying to pump up municipal balance sheets.
Is this just, well, did the Fed buy municipals too, or no?
They
Mm.
generally don't. They only buy
Yeah.
distressed assets. Municipals aren't really distressed.
Because it just seems suspicious to me that because they do some amount of tapering before COVID, and then they stopped and then they started again. This kind of lines up,
I
sort
guess
of
so. Yeah, maybe they did.
suspiciously. But then the MBS doesn't, and they were probably dropping those too. I don't know.
Well, they were dropping those into people who are still bullish on mortgages, right? And maybe people weren't so bullish
Hmm.
on municipals.
Maybe.
Then the next, and so I mean, if you want to go into your DD now with these, Kirk, I mean, fucking go crazy, because the next ones get a little more screwball.
I mean, it kind of backs up what that paper was. That paper wasn't very old. It was only published on December 27th, so it's the data and it's only like a few weeks out right now. Obviously, bank earnings came in and continued to support the thesis that they're deeply underwater. Well, the bank earnings that did come in, that they're still deeply underwater on their hold to maturity securities. Yeah,
Looking at
I mean,
those earnings,
I
like
mean the
how do
the
you
drop in
screw up
MBS
6%?
is very concerning. But I think that might have more to do with the carry trade than anything else, right? Because um, so you can't really see it because the carry trade back in, I mean, well, partially the way you're showing the chart, but like where is it, MBS here? So MBS actually started falling off um a little bit right as we approached 2000, end of 2007, which you can kind of see here, but it's really hard. If you zoomed in on that, maybe I could show it off a little better. But MBS did start to fall into the GFC, and a lot of that sell off was directly related to maintaining their positioning in the carry trade. And that's one of the reasons like the carry trade is like largely blamed for the losses suffered by like Bear Stearns and Lehman, because everybody was selling their MBS in order to back the carry trade, and that ended up devaluing the MBSs, right? And so and then when push came to shove, well, Lehman and Bear Stearns' total assets were significantly reduced because the market price of those assets had dropped so much.
Well, it's also worth noting that those assets, they're leveraged assets, right?
Yeah, yeah,
That's why they incurred so many losses and just went bankrupt practically overnight, was because we're not talking like I have a dollar, I spend a dollar on MBS. It's like I have a dollar, I take that dollar, collateralize it up to $100, and buy $100 of MBS.
yeah. Even beyond that, then you also have like CDS that are betting on the MBS, right? So you have like the mortgage-backed securities industry, but then you have like the insurance on the mortgage-backed securities industry, right? Which was a big part of the collapse in '08. It was that had gone like completely haywire. Like you'd have like a billion in MBS, and then you'd have like another 50 billion betting on that 1 billion.
Well, the thing was with the GFC. I'm pretty sure back in like 2006, Burry created the CDS and was opening the first swap lines with it. And then throughout, as this deleveraging happened, the interest in it picked up like crazy. And then yeah, so that whole market just got super disrupted. And then you had banks who were counterparties to these CDSs, just not only sitting on losses on their MBS but also losses on their CDS as well.
Yeah, yeah.
So it was a crazy time, and I think this time around the system is a little bit better prepared for it, but there's still just so much leverage in that whole behemoth that it's just mind boggling to think about.
So this isn't really COVID stimmy to munis running out. This is like
This is
municipal
bank balance sheet.
securities, yeah, being sold off. And I mean, I guess we'd expect to see banks dropping parts of their balance sheet uh when the opportunity came up. But that's a lot, man.
Yeah,
That's a big
so it
drawdown
could
in their
be
holdings.
it could be selling and it could be letting them run off, right? That's kind of it's one of the two, right?
Yeah.
So as far you can't really discern between them. I mean, the sharp reversal is possibly indicative of selling, but you know, it's hard to tell.
Say
And so
hold to maturity securities 10 times fast. What do you think? This is some kind of game, popcorn trader? This is serious.
I'm still
We're
pretty
looking at
suspicious
charts of
of
people's
popcorn.
potential future livelihood.
I think popcorn secretly is actually like a 10-year-old boy.
12.
12, yeah, that's true. Yeah, his yeah, he's more juvenile than a 10-year-old. Um, so the next two charts I had, I like the next two together kind of painted an interesting picture, right? So the first one is trading account assets, right?
Hmm. Which have gone
And I
up.
mean, yeah, it's
That's
just there,
interesting.
right?
Yeah.
Yeah, but it's there, right?
Yeah.
So so now look at the next one, the equity securities on the balance sheet.
Hmm.
Yeah, I don't know how to make heads or tails of this, but it's very, very interesting.
Fed doesn't have any equities?
Well, the banks don't, apparently. Apparently, they don't own any stocks.
It just can't be true.
I know, it's super duper duper weird, especially considering the trading account asset
Did this just
balance.
like
Like,
cut off in 2020 and they stopped reporting it or something?
I don't think so.
I think
Because
this
then
is the Fed's balance sheet, not banks.
no, these are from the assets and liabilities of FDIC insured commercial banks and savings institutions.
Hmm.
So yeah, found that interesting.
That's
I couldn't
weird.
think about
What the
that one.
fuck is that
That was really
about?
Yeah, that's very strange.
Yeah, I just want to put it on your guys' radar because it's super weird. But yeah,
Okay.
this whole balance sheet table is just it's jam packed with fun stuff. Um, so now we're gonna get into some meat and potatoes here.
Yeah.
Well, the next one is just delinquencies. I mean, we could gloss over that, but delinquencies are still like as a notional amount are still pretty high. But I haven't like if you adjust it for inflation, it might look normal. I'm not sure.
Okay.
So we could just gloss over that. But the next one, the multicolor guy,
Yep.
the real squiggle, that one is my favorite for today. So this one shows the unused loan commitments on their balance sheet.
Mm.
So they
Negative
space.
space.
Yes. So we talk about like consumer debt going up, right? And we're like, oh my God, it's all-time highs. It's crazy, right? But this is the other side of that. So when you have a credit card with like a $5,000 balance and you don't have any balance on it, like, or you have a $5,000 line of credit and you don't have any balance on it, that $5,000 is going to be added to this line, right? To the blue line and to the purple line.
Yep.
Right. So that's what this is. And so I put a bunch of them up there, and I wanted to explain kind of how they can be affected, right? Because with a credit card, and I was telling Jay Fresh about this earlier, with a credit card, the things that let's just start with a home to make it simpler. So with a home, right? So like the red one,
Yep.
that is not only a function of like utilization, but also a function of price, right? Of collateralization, right?
Yeah.
So if home prices go up, that red line is going to go up in proportion. And the contrapositive is that if people take out home equity lines of credit, the red line is going to be suppressed or go down, right?
Mhm.
So, or if home prices drop, it's going to go down, right? So that's why I separated it out. We can kind of see the housing bubble in it. But credit cards, those are a function of median income and unemployment, right? And utilization. So the only way for the purple line to go down is if people utilize their credit cards or they become unemployed and no longer and their
People
credit
start
gets
maxing out
like
credit cards, right?
yeah.
Yeah.
Well, it's utilizing them, and it's also just like your credit score goes to like 100 and you declare bankruptcy, that kind of stuff, it'll go down. Those are the two functions of credit cards. So this does kind of give you that little bit of negative space. Heading into 2008, into the GFC, you see what's funny is, before it even starts, right? You see a bit of a stalling out on the credit cards and the commercial real estate lines, right? And back then, commercial real estate wasn't really suffering reduced demand. So you kind of get this idea that the lenders themselves were starting to lean into, not the lenders, the landlords were starting to lean into lines of credit, to either boost income or expand, right?
Yeah.
And credit card usage, it's sort of flattening out, sort of around the same time. I think unemployment was starting to kind of creep up then. So utilization was picking up. And then GFC happens, unemployment spikes, and the loan commitments just tanks because credit conditions tightened like crazy, and
Yeah.
people
Yeah.
became unemployed and all that crazy.
What's really interesting is the drop off in commercial real estate here.
Yeah, oh yeah, the most recent one. Yeah, I found
Yeah.
that very interesting, and I think that is a
That's
function
from
of the
like
collateral.
beginning of 03 too.
Yeah, but I think that's a function of collateralization. So commercial real estate values have tanked, right?
Yeah.
And so I think that's more of what this is a function of than utilization, right? But it could be a little bit of both.
I wonder how much commercial real estate is being collateralized at a value significantly in excess of its current value.
Probably a lot.
To some degree it is, right?
Yeah.
What's
Probably.
old is new again.
We make assets better, Jay Fresh.
Yep. The alternatives era, right?
Yeah.
You can see it right there in that little dip. The alternatives era.
So
it looks like there's commercial real estate just tanking doesn't seem to have ever done anything terrible to our economy before. So we should be fine, right?
Everything's cool, but
Yeah.
It's interesting to note also, heading into 2019, right? 2018, 2019, right? Things started getting a little wonky. I found that to be fairly interesting. I think utilization was increasing, and I think that commercial real estate expansion leveraged on other commercial real estate, and the great financial circle jerk was picking up, right?
Mm-hmm.
So yeah, I found that pretty interesting. The commercial real estate thing, I don't know. But another thing to note too is that the purple line, even though unemployment spiked like crazy and we had a pandemic and all this stuff, it's kind of sitting there inching up slowly, but it's also doing a little bit of wonky stuff, right? It's flattening out, then it's bouncing and flattening out.
Well, also, you also have something that you should probably consider here is since 2020, you have banks desperately issuing as much credit as they can, right? That's a little off. So from like this point on, banks are trying to increase interest income, and so we have banks lending significantly in excess of what they normally would, because they're trying to drive that net interest income up, and so that probably has an effect on why we're seeing the consumer credit rise, right? Because they're give credit cards to anybody right now.
Yeah.
Like if you want to pay 25% interest, you can buy anything you want.
Yeah. Upstart offered me 50 grand for 20.5% APR.
That's a subprime rate. That's ridiculous. Don't you have like a good job in credit? You should be able to get like.
I didn't apply. It was just like an ad.
Oh, okay. Like a mailer kind of thing.
It was
I wonder who the fuck
don't
is
know.
taking those degenerates, degenerate Wall Street bets people.
So an interesting thing to note is that the unused loan commitments on credit card lines is still just barely below where it was heading into the GFC, like at its all-time high.
Hmm.
So inflation
So that
adjusted
would
is
imply
low.
that it's pretty low, yeah.
Yeah, it's super low. So we talk about how there was a paradigm shift with the GFC, and I think this is a good explanation of it. Is that people were more reticent to lever up into high interest rate stuff, and especially nowadays. But so the next chart, because so the credit card lines, if you look at the scales, right, I had to put the credit card lines on the same scale as the total because it's such a big number.
Yeah.
So in the next chart, I just took the difference between the two.
Is that 5 trillion in credit card exposure?
Yeah, just
Jesus
about.
fucking Christ.
So the next chart you're going to look at is all non-credit card lines, right? This is everything else. And what you'll notice is that when the slope starts to tail off, right, when it starts to flatten out and generate tops, you sort of get these recessions.
I like that you copy and pasted the definition of intangible asset.
Oh yeah, that's the next one. I found that one to be interesting. I had to look it up because I was like, okay, I need to make sure I know exactly what I'm looking at here. Which we could check out that one. Yeah. So intangible assets. I found this to be really interesting because it exploded. Post .com and
Mhm.
even into .com, it exploded. But even post .com, it just rocketed, right? Like just multiples, right?
Yeah.
And it's kind of crazy. And after the GFC, it kind of dropped a bit, but it's mostly stayed flat. And so intangible assets are basically bullshit, right?
Hey, as
Sounds about right.
somebody who has a lot of intangible assets, how dare you?
I'm just. Do you think that there is $450 billion worth of intangible assets that banks love having on their balance sheet that
No.
are just so valuable?
Well, what about the stable coins?
Girk, I'm gonna strangle you through the screen. Yeah, but you're right. On a bank balance sheet, an intangible asset to me just screams horse shit, right? Like
It's a liability, right?
it's a huge liability. I mean, an intangible asset, like let's say it's the intellectual property for AES encryption, and then quantum computers come out and make it worthless. Does their balance sheet take a hit?
I mean, we have like $3 trillion worth of intangible assets priced into the Mag 7 right now. So careful, you're treading on thin ice here.
I know. Jamie Dimon's about to come and throw me in a van,
Yeah, AI is an intangible asset.
like it's just so I don't really know. Once again, this is sometimes I just throw these things up because I don't really know how to make heads or tails of them. Like this one is one of those ones that I'm not really sure how I want to process this, right? Like, I mean,
Well, I'm sure if you go further back on this, which you won't be able to, but if you could, you would probably also see, significant spikes in this during periods of like large periods of economic development, like you see through the internet era, right? But if you went back to like post World War II into the 1950s, you'd probably see something very, very similar.
like, how do you price an intangible asset though? Like, how do I say that my patent on my, power washer bidet is worth $50 billion?
Well, if it's got a revenue flow.
Yeah, generally priced off of future revenues or future cash flows assumed from the asset.
So it's bullshit. I love
Yeah,
it. All
yeah,
right.
it's complete bullshit. But
Okay. Yeah, I kind of
so's
I see what
non-GAAP reporting, but we do that, right? So,
yeah, everyone loves non-gap for some reason, even
Go
though
back to the last graph. I don't think you finished explaining that.
oh, the final one. Yeah, okay, we can move on to the final one now. So that's that one's weird. That one is the total other something rather, right? Yeah, so other
oh look,
borrowed money.
it's all their
No, 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 no.
FHLB and
Not
discount
this
window
one.
money.
I feel like you just skipped right over you didn't finish the thought process behind the unused loan commitments minus credit card lines.
Oh,
Yeah.
oh yeah, okay, jump
Did I
back.
even open that one?
Doing
Oh,
doing a
I didn't
flashback
open
from
that one. This one.
Oh, yeah.
perception. So yeah, so basically it's the total unused loan commitments minus total unused credit card lines is everything besides the credit cards, right? So this is, this is the non-pores sort of, cool kids table, right? And when you see the appetite for these lines of credit start to flatten out, you get a recession. That's pretty
Yep.
much what this says. So yeah, wrap a bow on it. Yeah, when you because economic growth is spurred by two things: poor spending money and not poor spending money, right? Mostly poor spending money, but when the non-poors, and by non-poors I mean people who can actually open up lines of credit on their assets, right?
Yeah.
When they slow down their spending in aggregate, what ends up happening is these gigantic companies that are fueled by the great financial circle jerk end up having to reduce headcounts, and everything starts to look less certain, and then you get a recession. So that's the boilerplate distillation, backwoods moonshine explanation of that
Can you
guy.
explain why the vertical axis has two values? I assume you mean on this.
Chart
It's
crime.
because,
He's trying to kill some scientists.
yeah, exactly. So yeah, this is just purely to make Twitter angry, but it's because some of those numbers are small, and so like the purple and blue are really big, green and red are much smaller.
Yeah.
Yeah,
That's
so
why.
green and red on the right, purple and blue on the left.
I like this
Yeah,
one though. I like this big liquidity grab.
yeah.
So
So
this
it
is
was
all
at
like discount window and FHLB and fucking
Yeah, it's just other borrowed
BTFP.
money.
Yeah.
yeah, I actually had to bust out the explanation for it. And other borrowed funds is federal funds purchased, securities sold with agreements to repurchase, demand notes issued
So
to
it's
U.S. Treasury.
RRP
FHLB.
also?
Yeah, FHLB advances other borrowed money, mortgage indebtedness, obligations under capitalized leases and trading liabilities, less revaluation losses on assets held in trading accounts.
Huh.
So it's kind of just the boilerplate of it's the bullshit boilerplate.
It's almost like banks are doing, I mean, I don't want to say this directly, but it seems like banks are doing what Wall Street Bets has been doing for 2 years, which is getting loans and buying options.
Oh yeah, well I mean it went from a low of 340,000 to now like it's like almost 640,000 like and over the course of about a year, like since Jan
640,000 million.
Yeah, sorry, 240 billion or 340 billion to 620 billion.
Yeah.
So
One
that's
of
a big
us.
increase. Exactly. Yeah. So this could be seen as a decent little leverage gauge, right?
Yeah,
I mean,
yeah.
look at it heading into 2000. Look at it heading into 2008. Look at it
You,
now.
you know what's interesting is that peak at 2010 comes right before the flash crash.
Oh, and the double dip recession fear. Yeah.
Mm-hmm. Ooh, we're gonna get a double dip.
Well, I mean, we're just kind of in a shit trough, right?
Yeah,
So
yeah.
here's the part where I shamelessly plug, Jay Fresh's relative purchasing power chart. That thing was gorgeous. You should all look at it and read about it.
It just was pissing me off. Just ugh.
Yeah, so he did an amazing job of explaining, because I remember it was like a couple weeks ago I was talking about, when you integrate under the curve of these PCEs and all these other things, you really don't get that rosy of a picture. And Jay Fresh just put it so beautifully and eloquently, it brought a tear to my eye.
It just
Fucking nerd.
Here's the thing. Okay, yeah, I'm a nerd, but
Not you,
here's the
him.
thing.
We're
Oh,
both nerds.
here's the thing that really was pissing me off is that, like, okay, fine, we can quibble over the current snapshot now, which is what everybody's looking at when they're looking at rates and comparing rates. They're comparing the snapshot in time right now. So if you just started working today, today was your first day on the job, you're going to be doing historically about as well as anybody else. But if you started working before today, then to look at your relative purchasing power, you have to integrate over time, right? And you have to to compare one point to another, you have to integrate. You can't just look at rates. Um, and what's really crazy is that they're making this pretty egregious error, and at the same time saying, well, all of these people think that they're worse off. They must be wrong because my analysis says that they're fine. And that just drives me crazy because people are pretty sensitive to their financial condition. And I don't think that there's a lot of, like, I mean, people try to say that there's a political tilt to it, but I don't think that people are really, that just disconnected from reality about the hardcore inflows and outflows of their bank account, right? I mean, people are pretty good at figuring out relatively how well off they are relative to a previous period of time. And it just drives me crazy that the people doing the analysis run into this fact and say, well, they must be wrong. My data, my analysis is correct, right? Question your analysis is my point, right? Just if your analysis doesn't match reality, question your analysis. And it was pretty easy to show that, hey, if you adjust for the financial conditions before the pandemic to after, people in aggregate are worse off by, something like 6%. It's probably worse.
Well, the
But
worst the
I was
worst part
trying
is
to
that
be
a
as
lot of
fair as
those
I could
charts
be.
come through official channels, right? So nobody even takes a second to question them. They're just like, "Oh, yep, everyone's better off."
Yeah, and I didn't post any charts. They're all on Twitter. In my, like, stream of consciousness soup. So good luck going to find it. But basically, the takeaway is if you integrate from financial conditions before the pandemic to now, the median wage earner has 6% less purchasing power now than they did before.
Yeah.
That's
It's
basically
noted
it.
that purchasing power growth has lagged, is now 6% behind the long-term trend. Is that a better way to put it?
Yeah.
Yeah, I mean, prices have risen 6% faster than wages have in total over time.
Yeah. And right now wages are slightly higher than the rate at which prices are increasing, so that'll trim up until, inflation goes
Yeah,
up
we'll
again.
see. What's really interesting was that, like, for a long period of time before the pandemic, wages were above inflation, or were above CPI at least,
Yeah.
right?
Yeah. Well,
So,
we had a period of very, very low inflation, right?
well, and this always begs the question of, is that the real number? Because of all of the adjustments they have to try to make for quality of life and quality of products. That's very hard to do. So that's why when I looked at that, I just did a baseline of wages were growing about 1.8% was the spread between wages and CPI, and so I just applied that as the baseline. So now we're back to baseline, right? And so if that's the baseline, which is wages grow with a spread of 1.8%, then we're not gaining any ground.
No, it's
So,
transitory, right? Like it's a transitory kick in the balls. We're not supposed to recover.
well, you could, right? But I think the longer term trend, I just was dicking around with this today. Somebody was kind of poking around at, the average or median wage to real GDP, and I was like, I don't know that I really like that. So I looked at breaking it out into the quintiles, and looking at their growth or their wages relative to the nominal GDP per capita, right? So the idea being that a quintile would be maintaining their quality relative to the output of the country if the ratio of those two numbers stayed the same, right? So if the nominal GDP per capita is $25,000 50 years ago, and you're making $25,000 a year, it's an example, right? Then the ratio is 1, and so then if nominal GDP today is 50,000 per capita is 50,000, then to maintain your quality of your piece of the pie, you would need to be making 50,000, right? And so I looked at those for each quintile. Full disclosure, I had a bias. I was expecting that number to go down at the bottom and to go up at the top, but it went down for everyone. Uh, and so then I was thinking, well, where's all this productivity going, right? And then I was poking around for a while, and I think the thing I came up with that I don't know. I mean, it's plausible. It's certainly not the only theory that could explain it. Is the percent for non-financial net income of corporations as a percent of nominal GDP has risen in the last 20 or 40 years or so by 120%, right? So I think what the story is that the very tippy top who owns primarily these companies, they don't view themselves as an entity completely separate from the companies that they own. And so if you think about them as a package of the people who own the companies and the companies themselves, and that entity will then try to maximize its return by reducing its tax liability, then it makes perfect sense, given the current tax structure between companies and people, to increase the profits and retain those earnings in the company versus paying it out to yourself. And I think that's kind of just what we're seeing. And I don't know, all this stuff just makes me angry because the data is there. You just have to put it together and show it. But anyway, people are worse off. They've been getting worse off for 40 years, and it's all just really, really rich people just holding it in their companies. That's basically it.
The great financial circle jerk.
Prince
Yeah.
Peach Fuzz says, "Fuck this! I'm moving to Djibouti." Yes, this is something that we do need to discuss today.
Yeah, I'm behind the curve on Djibouti. By the way,
Okay,
so
yeah. So I wanna us to all pool our money and invest in a small seaside resort and refueling station in Djibouti. Djibouti is a fairly stable politically East African and economically East African country, right at the entrance to the Red Sea. I think we could make a killing.
So it's the Moulin Rouge sort of thing, right? So we're gonna name it. I just put it in the chat.
What are we naming it?
Yeah,
Djibouti.
Yeah, I assumed that was like part of the appeal of picking Djibouti because it's ya booty.
Well, actually, no. That's just a benefit.
Oh, well,
Yeah.
even better. Yeah.
All right, I have a chart since you guys want to pull up charts. This is Nauru, which you guys are probably. I'm probably gonna have to explain that, I assume. So Nauru is the non-accelerating inflation rate of unemployment. So it's the level which unemployment falls or is expected to remain constant, right? And if unemployment is below Nauru, then inflation is expected to increase. Milton Friedman. This is
curve hooky. Yeah,
well,
I've read about that. It's bullshit.
Sort of, yeah. Except what's interesting about this is if you look at the unemployment rate subtracted from estimates of Nauru, What you see is that excessively low unemployment, so like NAIRU less than U3, um, precede recessions. So extra low unemployment is even more than inflation is strongly correlated with the onset of a recession.
Huh, interesting. So here's my issue I have with
So
NIRU
it
though.
well,
Is that
hold on.
the number changes.
So
It's not a
when
constant.
when you filter like wages through the Phillips curve, you don't really see this, right? But everyone's like talking about all these, like firms and their, solving their supply chains, but they're still facing a significant labor supply problem.
Yeah, that's what, and this all comes back to the whole idea of productivity, right?
Yeah, it does. But I wanted to kind of point it out to JFresh because it's kind of an interesting metric to look at. Like another side of
Well,
it to look at. Besides
when
the
you're
effect
Yeah,
of inflation. But
so when you're
what
having
about the effect of, reduced labor supply on forward earnings?
Well, yeah, that's when your labor supply is constrained, right? The only choice to move forward with economic growth is either more labor supply coming in, which, as you could tell by our immigration policy, is not exactly what we're looking for.
our interest
Um,
rate's already also almost at zero, which is like the lowest ever in our country.
yeah, so the next step is to increase productivity, right? And you run into limiting factors. And we're kind of just doing that right now. So it's kind of fun. That's why people are coming out with the rabbit, right? Is because they're trying to find ways to boost productivity.
Or it's just there's so much easy money that it's let a lot of really stupid ideas through the cracks.
Well, both, right?
Or
It's
both, yeah, yeah.
yeah, it's people see it's easy the easy money part, right? Why is money easy? It's because large corporations are reaching for anything. It's not because they have so much money and they just, they're like flush with cash and they just want to, make it rain on them hose. It's because they're trying to find ways to boost their profits through productivity. Important distinction to make there, I think. They probably are flush with cash, but you don't just go and start spending it because you're flush with cash, because these corporations are not like us. They're not like the pickle jar. They don't get $1 million and then go straight to the strip club. They want to be smart about it. And right now they're so desperate to be smart about it that they are making money easy for these ridiculously stupid startups to just make the most inane, useless, pointless piece of plastic shit, fucking idiotic thing, and make millions off it.
So I take it
Yeah, they sold
you're not buying a Rabbit AI.
well,
I'd
he's
rather
not
get
buying one because
Reddit
they're all
for
sold
free. I
out.
think it would be a really good rectal stimulation device, and that's about it.
Hmm. Does it vibrate?
No, but I'll make it vibrate.
Oh, okay.
It probably does. Why wouldn't it?
So
I
I
just
assume anything with a battery should vibrate.
like they're talking about like linking your Rabbit to Discord to use Discord bots, and I'm like, what the fuck does that even mean in terms of economic growth? Nothing. What? Like it just I look at their if you look at their website, it's just it looks like a full on fucking shell company money grab piece of shit. Like and there's people on Twitter and stuff losing their minds over this shit. Like
Hey,
it's
you want to get even? You want to get even angrier? You want?
no, but sure.
Do you want to know? Do you want to know what one of their like hype? They created some of their own hype language to distinguish themselves from other AI
Oh
things.
God.
Uh,
Oh,
you've heard. Well, stay with me here. This is going to be very painful. Uh,
oh,
you've heard of the large language model,
oh no.
uh, but have you heard of the large action model?
Oh, Jesus Christ.
Oh. Oh.
Mm.
Where the rabbit uh, takes your language in and performs an action for you.
Rabbit, jerk off.
Yeah.
Oh
So
my
this
god,
is we've already moved past LLMs. LLMs are so ChatGPT. ChatGPT couldn't. I mean, even boomers aren't using it anymore. It's like the silent generation's the only ones using it now. We've all moved on to
The
large action
silent
models.
generation.
Oh man. All right. So what's our AI product we're going to be offering people that's just horse shit? Oh, you know what it is? It's Beats by Dre, but AI powered. There we go. Done.
Oh, so it knows what song you want to listen to next.
No, it does no, you're thinking too hard here. All I'm saying is that the audio is processed by AI to improve your listening experience. And
Yeah,
the
so it's just
AI
like an
is
equalizer that randomly generates the levels based on words you say. So
no,
you
it,
think it's
you
like
throw
doing
you throw it
something?
you throw like 100 ohm resistor inside the headset and that's the AI.
No, you could
LLMs
have
are
it
so 2023.
you could just you could be like, hey Beats or whatever, the hey Jams, my Jam headset, hey Jams, get this party going. And you think like, okay, that's gonna like crank it up and make it great for just like, rocking out or whatever. And it just randomly generates the equalizer settings and you're like, oh, it changed. Yeah, let's go.
Well, all it does is so what happens. So here's the real. So what it does is it takes the bass and imperceptibly slowly reduces it, right? So where the bass gets quieter and quieter, and then when you say pump up the jam, it just turns the bass back up to the normal level.
Wait, so you're just like integrating in the drop into everything.
Well, yeah, but you have to tell it to do that because
That's
that's the.
genius.
So it's just like a bass drop emitter.
Yeah.
Oh, I love it.
That actually is, yeah, I'm in.
Oh my god, imagine if it could just bass drop during every like moment of tension in your life.
Ooh, oh, that's so great. Yeah, I love that. Where it looks at your heart rate and blood pressure, and then when it starts to rise, it starts playing like really
Yeah, like
intense music.
the BPM just drops off and like, all the top end goes away and there's just like and the bass drops to like the lowest possible level. And then when you've made a real life decision and you've committed to it, bass drop.
Yeah, you're like signing the loan paper.
Dude, narcissists like myself would love this. I've always
Oh my
needed a
God,
soundtrack for my life.
pretty brilliant.
Oh yeah, no, that's the next step with all this auto-generating music is to just slap on a headset that reads your brain waves and then generates the music that you're thinking about, and it only makes your mental illness worse.
What if like for schizophrenics it just talks to the other voices?
Keeps him busy.
Yeah.
Or it just makes new voices.
It's like having a problem focusing on your work because of the voices in your head. Our
Just
chatbot
ignore it.
talks with the voices in your head so you don't have to.
No, when your brain waves suggest that you're hearing them, what it does is it injects more of them, so you don't know which ones are real and which ones aren't.
Oh, interesting, like white noise.
Yeah, except for it just sends you into the abyss of madness. You see, it's like Facebook, but even better, right? It just directly damages your mind.
Jesus
That's what I'm saying. If you're
Christ.
nervous, play really tense
How is
music, so
how
you get
does
more.
Meta make so much money? Who's still using Facebook?
Advertisers.
Dude, I hate Facebook. I hate Meta. I want them to go to zero.
But advertisers, I mean, they have to be getting some sort of nominal payout. Like there has to be like a response function to that. But if nobody's using Facebook, then how are they getting improvement in their customer base?
So one thing that Meta did that I did like was they came out with an open source AI thing. That was kind of cool. But other
I
than that, I
guess.
hate them.
But what is
That doesn't make you money as an open source, but it does mean your shit's gonna be robust.
anyway?
Hmm.
You
Are you
know?
guys going to let me ramble about ETFs and Bitcoin for a second? Or
Oh
are we just going
god.
to skip that?
Yeah,
Dude,
dude, go
you
nuts.
should go
I think
ahead.
I think I think you need your soapbox.
I do. Because this is, first of all, I don't care about crypto. I played around with it in 2021 like everybody else did. Made some money off of Cardano, did some things with it, and then just kind of after a while, it's like, okay, this is all promises. Nobody's delivering. All of these people, that are running these coins are already billionaires now because they already sold all the coins. So they don't have like everything just gets done like 80% and nothing gets actually launched. And it's just like this perpetual just promise machine, much like Tesla.
Or AI.
And so or AI. And so I just kind of got like disenchanted with it. I've seen a lot of technological AI or technological hype cycles in the past, so I kind of know them when I see them. So I don't have very high opinions of crypto as a solution for anything. People think it's a commodity or an asset or whatever. Fine. I don't think it's any of those things. Regardless, the ETF for Bitcoin cannot be like, there's no way in which it could be bullish for the coin, and the reason for that is because um, I think the net effect of this is going to be shorting on exchanges by Wall Street, right? So in the past, Wall Street, it's only so much they can do, right? So much money they can actually like get onto exchanges to do, you know, the different financial transactions that they might want to do because these exchanges are unregulated and blah 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 blah. But if you create an exchange traded fund on the traditional exchanges and then essentially just link that to the exchanges, then it gives them a backdoor to go in and pull all of the tricks that they're pulling now on regulated exchanges on an unregulated exchange, right? And people think that, crypto is inherently insensitive or has defenses against some of these more traditional tricks that Wall Street plays with the traditional markets because it's all backed up by this decentralized blockchain that is, very hard to spoof, blah, blah, blah. None of that matters because none of these trades are occurring on the blockchain. None of it.
Yeah.
Uh, you know, most of the price, I want to say most, I'm going to go ahead and say all of the price discovery of any crypto coins are done off chain. All of it. The only way that you know what the price of something is if an exchange tells you what it is. And the only way to, impact what that exchange says it is by trading on that exchange. Those exchanges are all trading off chain, right? You put your money in and then you buy something and the exchange just tells you have it. And that simple mechanic is why, exchanges go bust, right? Mt. Gox went bust a long time ago. FTX went bust, right? The money's not there, right? Because it's none of it's actually done on chain. And so it's kind of brilliant what Wall Street's been able to do, right? They can get around all their pesky rules of, locating locating the underlying asset and delivering it after a certain amount of time. None of that exists on these crypto exchanges. They can short and never deliver ever. And it's kind of beautiful. The more money you put in, the more they can short. And it sort of sounds counterintuitive because people think, oh well, they run the risk of getting blown up. Yeah, I mean, I guess they can get blown up if there's a huge surge of money. But what they really want is just like a steady increase of money over time, because the more money that's being traded on these securities, the more that they can come in and reach through the ETF and just pull a little bit more money out of the crypto exchange and, quote unquote, deliver the coins to the people on the exchange to put their money in. But all the people on the exchange see is that the coin value is going down, and eventually they'll either cash out or just wait, right? And so this is not going to be a net bullish thing for crypto. I mean, now you've basically just let Wall Street unregulated come in and just use you as an ATM as much as they want. So that's my rant.
I mean, I was tweeting about this when they first announced them like 6 months ago, and I had all the big like like Twitter fucking BTC influencers come in and be like, oh, this will never do that. It'll never provide infinite off exchange liquidity. This is gonna be the new era of Bitcoin. And like sometimes I've really gotta ask myself, like, what the fuck do these people get out of just being like completely ignorant to the state of the market, right? Like I I cannot figure out how does their following not go, hey man, that's doing completely the opposite of like what you said, and like but they'll just stick with that one narrative forever, and they just like find other people that want to hang on to that. Like I know like what's her face, Lynn Alden or whatever. She's like a
Yeah,
big
she's
crypto influencer. I said that about like that this was securitization of BTC, right, when they first announced the BlackRock ETF. And she was like, no, it's not like a big deal. This is all going to be done above board, and like the SEC is going to monitor it, and there's going to be no synthetic liquidity for Bitcoin.
the SEC doesn't monitor exchange activity on crypto.
Yeah, I know.
That's like the genius of it. That's why I think that's like once Larry Fink like put all these pieces together, he's like, we need to get some fucking Bitcoin ETFs immediately.
I mean, we were talking about this when we were doing the research with GameStop, right? It was like,
Yeah. I mean, this is where we learned a lot of
well,
this
yeah,
stuff.
like fucking doing this on Bitcoin this is the ultimate asset to short vol on, right? Because there's so much fucking volatility. The exchanges are unregulated, and there should be no access to synthetic liquidity because the blockchain should protect from that, unless you have an ETF and you can securitize it. And once you can securitize it, you can short the ever loving fuck out of it.
Yeah.
And if there's anything that's
I'll be
worth
really
way more
excited
than
when
it should
when
be,
the
it's something
ETFs
that trades at $43,000 a unit and has no actual value.
I just posted a meme,
Yeah.
Gert. Check it out.
Yeah. I mean, it'll be even better, I think, when these ETFs get options, because then it gives you a lot of leeway to short all sorts of aspects, like big money in Wall Street to shorting all, playing all those games with volatility and things. And I mean, yeah, something else I didn't talk about. I was reading the Bitcoin ETF for iShares, which I think is the biggest one right now in terms
Yeah.
of assets under management. And if you read it, all of their Bitcoin and cash and things is custodied through Coinbase, right? Which is all off exchange, right? And so, yes, these ETFs, they have a trading account and a vault, and the vault would be on chain, but they at least as far as I can tell from the page, they don't distinguish their Bitcoin holdings between trading account or vault account. And so you're never going to know what fraction of it is on or off exchange. And I think it's kind of interesting right now. They say they have $500 million under management, I think is what it is. And it's like almost 100% in BTC. We don't know vault or trading account. But then if you look at like their net value, it's only like 150 million. So they have like 350 million in liabilities, and who knows what that is, right? So it'll be interesting to see how those numbers evolve over the next couple of weeks. I think it'll be a wild ride.
Yeah, I honestly, the whole thing is so insanely shady to me. Like, so the one way that these ETFs are probably going to blow up is if they do get a large enough buy-in. So, like, if I wanted to blow up a Bitcoin ETF, it'd be pretty straightforward for me, right? I'd buy, let's just say, $500 million worth of their shares, okay? And then what I'd do is 1 week later, I'd sell it all.
Yeah. Well, yeah, I mean, I think that's what happened with like the meme ETF, right? I mean, they just got shorted so hard that they just drained away the assets under management, and people just left it, right?
Yeah, well, if you think that they're just going to siphon away money, which they are, and you want to expose the fraud, then yeah, all you have to do is invest, let them siphon away a good
Why
portion of your
would you
money.
want to
Then sell it.
expose the fraud and not make money off the fraud?
Well, because you could make money shorting the company who made the ETF.
Yeah, I'm not.
Yeah,
I'm
BlackRock's
not
not going to
shorting
take that.
iShares.
Dude, if
BlackRock.
if BlackRock owned all of Bitcoin and Bitcoin just evaporated, BlackRock's share price would go down like $1.
I'm not talking about BlackRock. I'm talking about the next ones that get approved, like by like
You mean once we start getting leveraged, like fucking like ETN products?
That's what I'm saying. We got to get those options going on these things.
Yeah, we need
That's when it
options.
gets real fun.
I'm gonna sell
'Cause then
so
when it
much
comes time-
Bitcoin vol.
Like when it
Yeah,
comes time
but
to
I
approve-
think that's the thing going forward. I mean, I think the really smart people that are trying to play this effect are going to stop playing Bitcoin price and start playing Bitcoin volatility.
Yeah.
Because it will pop. It's not just going to go straight down. I mean, there will be times. I mean, it'll probably run magnificently. I mean, just go look at GME, right? It's a decaying exponential overlaid on a sinusoidal curve, right? I think Bitcoin will probably do something pretty similar. So you want to play the up and the down, and short and long vol.
Wait, hold on, JFresh. Are you ready for BTC cycles?
Yeah.
Nice.
But what are the
BTC OPEX?
What's like the timing? There's no regulations. There's no built-in timing mechanism.
Well, there's still T plus 35.
Yeah, you have all the timing mechanisms forcing settlement on the ETF side.
Yeah, you still got FINRA
okay.
regulations.
Yeah,
on
you
those.
could. Yeah,
Let's get
that'll
rich.
be really
That'll be fun.
Yeah, it'll be fun. It'll be fun to see. I think BTC is worthless, but it'll be an interesting trade for the next 5 years or so.
GME is worthless, and it just picked up like it picked up like $1 billion in market cap for no reason.
Yeah. So anyway, that's my rant on BTC ETFs. I know people probably don't care, but I just think it's fun thinking about it. It's definitely an interesting mechanic.
The great financial circle jerk. It's all part of it. It's all part of the big thing where we all just stand in a circle and touch ourselves.
Everyone's coming on the same cracker, but no one wants to eat it.
No one wants to think about eating
it. I know, Turtberg. I see you in here. I see you're very excited.
We know. You care a lot about ETFs. You'll get rich too.
I'm still slightly butthurt that I DRS'd my GME shares because of you. Back before it was cool. And
everyone should blame Turd for DRS being a thing.
Yeah.
It's entirely his fault.
It actually is, which is the funniest part about it. Yeah, I mean, just like DRS had no effect on the shorting behavior on GameStop.
The blockchain will have no effect on the shorting behavior.
Right, the
BTC.
blockchain, right? You can do exactly what they did, which is try to just remove everything from the exchanges, but you're probably going to lose.
I mean, you could remove your assets from the exchanges, but all the other assets are going to still go down in price.
Yeah.
So.
Because you will never, if you remove everything from the exchanges will just cease to exist, and then all of your assets will have no price because the exchanges are what gives it a price. So there's really no way to win.
All right, I posted my meme on Twitter. It was too good.
I'll boost your account next once you start writing DD.
I don't write the DD, okay? I just talk about shit, and then you guys write.
Squiggler. He's a squiggler. He gets us thinking, and then we don't attribute him anything.
Well, Dork can be like the TA side of our fame trifecta. Before we start the Vol Stars podcast.
I'm just gonna post like the monthly candlestick of SPX at the end of the month, and then like write 4 paragraphs about the candlestick.
Yeah, perfect. But the monthly candlestick.
Yeah, exactly.
Yeah. Okay, perfect.
single candle analysis. It literally can't go tits up.
Yeah, and then me and JFresh will repost you, and then you'll have double the followers that we have.
That's you know what? Every
That's how the
single one of
bot
them
works.
is bullish.
What's
I'm
up?
just gonna be bullish.
You're just gonna be bullish?
I'm just gonna be bullish, and that way I'll get like 10 times your guys' followers because I just say bullish shit that makes no sense.
Fuck. He's gonna beat us.
He's going to beat it. Statistically, over time, he will win.
Yeah.
Yeah.
He's gonna be the next Tom Lee.
Speaking of the
straight.
market, I mean, there's really nothing to say about options. It's the same shit.
Yeah.
I mean,
selling
you were
the
dead
shit
on.
out of-
You were dead on last week with violent chop until down.
I mean, that's just where I'm at until.
Technically, he lost. I won.
I think I didn't even see what you guys what your predictions were because I had to run. My family was literally melting down. But yeah, I think I said just like a straight line, something real lazy.
You did choose just a straight line. It was the worst. Dork predicted a dip and then a rise into the end of the week, and I predicted a rise and then a drop. But here's why I won. My end of week prediction was $20 higher than yours.
Oh god.
So
Yeah.
I'm
Well, I
taking.
bet you could guess what my prediction this week's gonna be.
Oh god. Yeah. Okay.
Violently flat.
All right.
Do up, down, up, down, up, down.
That's what I'm gonna do. I'm
Here,
gonna
go
do
for it.
up, down for the 4 trading days.
You want to know what? You want to know what really makes me so happy? What's something that's made me happy because I've been seeing this starting to trend on Twitter is people now talking about how the SPX closed at its all-time weekly high last week. It's like the longer that this goes without closing or reaching the all-time high is just funny.
It's not. It's not its all-time weekly high. All-time weekly high on close? Is that what they're...
Yeah,
that,
all-time
Jesus
weekly high on close.
fucking Christ. What a bunch of losers.
It's a bull market because of that. But it's just getting really silly, which means like
It's getting like further and further from all-time high.
it's gonna be really funny if we don't get back there. I mean, obviously there is no God and they're all gonna be vindicated when it hits 5,100 in like 3 weeks, but it would be really funny if it didn't.
You could spend the last 2 weeks of the month pulling down to like 45.40. What was the highest close on the monthly? 45.15, 54, 47.66. That was already higher, right? Yeah.
So we've hit our all-time monthly high on close.
Yeah. That happened last
Nice.
month.
Oh. So we're already at all-time highs. We did it, guys.
Yeah, it's done. So now we
Now
can go down.
now we can go
Perfect.
down again. Yeah, at this point, I just want them to just pump the hell out of it, just so we can just end this purgatory that we're in.
Do we have
They're
any
just
cool
fighting so
economic
hard.
data this week? I don't think this week's very
No.
interesting. Yeah.
This week sucks. There's like one bond issuance with any sort of duration, and it's like $13 billion.
Dude, we got the NOPA crush report on Tuesday at noon, though. Fucking oil
I don't-
prices. Seed oil, man. Seed oil. We got retail sales on
Yeah,
Wednesday.
Redbook, but people haven't really cared about Redbook being high for months now.
Yeah, we got a 20-year auction. Do we know how much
Yeah,
that's
that was
for?
it's like 13 billion. It's like nothing. I already looked it
Okay,
up.
that's garbage. Thursday. Building permits. Housing shit could be impactful. Jobless might matter. We have Michigan Consumer next Friday. I mean, it's OPEX, right? So it'll be an interesting week anyway.
Yeah, that's why I think violent chop. I think there's just a lot of gamma.
Yeah, this is a smaller OPEX than December, right?
Yes. And the thing that sucks is that like a lot of the positioning has already moved out to like March. So
Yeah.
this thing could go on forever. But everybody's like max long. Like all of the indicators that are somewhat quantitative and not just oscillators or random, PA things show that like everybody is just like all in max long. So it's like, where is that next nominal dollar or marginal dollar coming from? Everyone's like, oh, it's going to come from money market funds, but I mean, we all know that's not true. It's like everybody's already max long. So we're just going to like sit up here and just bulls are just going to fall over themselves trying to climb the ladder forever until the end of time.
Yeah.
Interesting. So JPM released a thing. The Treasury is underfunded in coming years. I think it's unlikely to slow increases to coupon sizes at the Fed refunding. So net coupon borrowing capacity versus total funding needs. 2024 is the last year that they project borrowing capacity will exceed, assuming full SOMA reinvestments will exceed total borrowing capacity. And then they expect total borrowing capacity to drop to 1.2 trillion in 2025 and under a trillion in 2026. Huh. I'll have to send you guys that chart. That's interesting. I'll put it in the chat.
That does sound interesting.
Yeah, I'll have to dig through to think about what it means. But yeah, I mean, there's a question of in general, right? People look at, yes, I get it. The numbers are all getting bigger, but that's an economy. Population grows, numbers grow. But numbers getting bigger isn't necessarily the bad thing. But looking at the rate at which the federal deficit is growing versus the rate at which the money supply is growing to hold that debt is, I think, one of the critical things. And right now, the deficit is growing faster than the money supply, which is why I think that bond rates are gonna pop, right? Because there's not enough money to facilitate all of that currently. Probably after RRP runs out, rates are going to want to pop. So I don't know. I mean, the real game is figuring out what's the Treasury and the Fed going to do to prevent that to the extent that they can. In the second quarter, because I mean, Yellen's got to come out with her expected, borrow plan end of the month.
B of A's market flows still show money market in the lead by quite a lot, followed by corporate IG, corporate high yield, and then bank loan. Little pullback on gold and silver. I was trying to find the CTA positioning. I'm gonna have to look
I
that
saw
up
it.
later.
So it's still pretty high, pretty long.
Yeah, they were pretty long, but like like the sell side had moved a lot closer to spot. So like they're not a buyer in an up market. They're buying like a few billion and flat, and then they're selling like 300 billion and down.
Yeah, I mean, this is a potentially precarious place, right? Because everybody's so long that, I mean, that you always want some amount of people to be short because shorts turn straight down into volatile chop, and that volatile chop is influential, right? It influences people and prevents them from panicking.
Yeah.
And so when everybody's just super long, it's a little scary because there's more propensity for a straight down kind of thing.
Yep. They call that panic.
Yeah. But we're also so far into the moral hazard super cycle of the Fed put that it seems like people's propensity to care has gone way down.
It's really hard to say if there's a Fed put in action now.
Well, sure, but
I don't
everybody
necessarily.
believes it is.
Yeah, I don't necessarily agree that we have that.
I don't either, but I
Yeah.
mean, we've had it in the past for so long that everyone just doesn't care. Like things that used to cause insane panic in the past has no effect anymore.
We're all Pavlov's dog. Or whatever. We've been mentally conditioned to believe that the era of
Stonks go up.
the last like 15 years is just we are so used to forward extrapolating that now it is our future forever and all eternity is easy money and low rates.
I mean, I think, if you look at like people taking moonshots everywhere, whether it's crypto or meme stocks or Mag 7 or whatever, I mean, it's all a function of, the wages down relative to, output and, these financial instruments way up, right? That's sort of that's what the Fed's propping up. And, so I think it's a very natural response for people to try to chase that because that's really the only way that you can gain any footholds economically anymore. And it's ultimately going to end badly, right? Because it's all speculation. It's not really driving any productivity, and eventually it'll collapse. But not now.
Oh, fuck you, Girk. I see what you're doing. Fuck you. No. No.
What is he doing?
He's stealing my DD as we speak.
You don't have any DD.
Are you kidding me? Dude. Okay. I pre-drew mine, and I'm gonna put this
I was
in the
gonna
chat.
let you go last so you could win.
Wait, where'd you draw yours?
I just see it on the stream right now for him, but check out what I just drew while I was preparing.
Where?
It's in the Dick chat.
Yeah, but you got like that little spike on Thursday or Friday.
Okay.
Wait,
Yeah, that's
wait,
right.
did you publish? But you published that after he drew his, so how could he know?
No, I drew
Yeah.
this one, and then I saw what he was drawing, and I was like, "What the fuck?"
Oh, well,
Oh,
you
you
can't.
guys are just of the same mind. I think that's. You guys are so bearish. It's gonna go down. It's gonna go down.
Well, I mean, it should go down.
Well,
All the
yeah,
data sucks.
but then it doesn't go down. I mean, you look
All it
stupid.
takes, well, see, JFresh, the thing is that it only goes down once people decide that it's time to digest the data. And by that, I mean make a press release that said they're digesting the
Yeah.
data.
We had a nice like 125 BPS drop last week. That was plenty of range to make money on all the puts, right? Like if you'd bought a put from any time from Monday market open until Wednesday, you would have made money.
Okay,
right guys? Right, chat? You definitely all made money on those puts you bought when they went in the money and you were like, oh my god, I'm rich. I'm going to hold this forever. All right, what's yours?
They all bought them for this Friday, and they're still holding them.
Okay, Girk. So hold on. I'm readjusting mine to make sure that we have a little bit of a difference here. Okay, you ready?
Okay.
Okay, so we open the week at 47.75, I think it is. Yeah, 47.75. Okay.
Mm-hmm.
And then we close that day at 4,800.
Ooh.
And you can just make a straight line at 4,800 to open of Thursday.
All right.
And then end of Thursday, 48.25.
I've only got Wednesday. So you're saying straight line to 4,800 Tuesday and Wednesday?
So end of day Tuesday, we're at 4,800 and we stay there through Wednesday.
Oh, okay. So flat through Wednesday.
Yeah.
All
Okay.
right.
And then on Thursday, we close the day at let's see. So Thursday we close the day at 48.25. Okay.
Okay.
Halfway through the day on Friday, we hit 4,900. And then end of day, we're at 50.25.
Okay, I like this.
This is so insanely bullish.
I love it.
Hold
It's
on.
just crazy enough to work.
We're not there yet. There we go. Where's the caller? There, right there, the caller. There we go.
No, you said 40, 50, 25.
That's true. Okay.
It's just crazy enough to work.
It's ridiculous. Dirk's projecting a 5% upside on OPEX. Well, you definitely went off the beaten path. I'll give you that.
Yeah, you basically stole my line, so I might as well just make a fun one.
I mean, you could have
why not?
had like a bounce into end of day Friday and closed at like 47.50 or something.
I mean, to
No,
be
this
fair,
is more fun.
the JPM collar has been breached like every time in the last 2 years.
That's not true. We had it roll down in September, right?
Well, I mean, like while it's open, the price has gone above it. Maybe not necessarily close above it, but the price has exceeded it a lot of quarters. So by that logic, we should see 5,100 between now and the end of March or end of Feb.
I'm sorry, I'm just looking at my line.
So ridiculous.
It's a short
Works
squeeze. I mean, what else
reputation
would
in
it be?
tatters.
There's no shorts to
exactly.
squeeze up there.
Why not gamma squeeze again?
Who are you gonna squeeze up? There's nothing up here. There's no options to squeeze.
The ETFs, they're gonna squeeze. Fuck it.
The ETF's already squeezed out.
They're gonna squeeze some more.
All right, whatever.
I mean, they are definitely trying to come back in and sell calls, which is creating the potential kindling for another push off if they get squeezed out. We don't get to drop until people stop selling calls.
No one will ever stop selling calls. There's a $60 billion industry built around just selling calls every week.
Yeah.
And it's
That's why we
growing.
go up.
I don't think so. I think we go down into the end of the week. Maybe not Thursday, but maybe
honestly,
Friday.
Like,
I just keep getting edged every week by this ridiculous put leverage that just keeps growing, and I just hope I get to see it pop. I don't really care when.
I do want to throw in a test of the all-time high, but I don't know when it would happen. Maybe like back here. Maybe like market open.
Hold on. What would be the most obscure like new all-time high we could come up with for this week? That's what we should try to target that they just miss.
They just miss
28.25?
the 300 and the 52 week. No. I don't know.
Yeah. Anyway, all right.
Closing above the highest open.
Oh god, it's fucking.
SCX of 4,000 end of month, 69 cents below all-time high.
Wait, so Dirk, I haven't looked at financial Twitter too much in the past, like in 2015, but were bulls going this insane when SPX was just continuously hitting all-time highs every day? Were they just going insane the whole time?
Pretty much, yeah. I didn't pay a lot of attention to Twitter back then either, but I mean, yeah, bulls were just like everybody was trying to find value somewhere, and there wasn't value in anything.
Yeah, but I do think that it could be a little bit different now because a lot of people just acknowledge that it's not a value proposition anymore. It's just a Ponzi. And so
it's not a Ponzi, it's a growth proposition, okay? Totally different.
I will say that futures aren't doing so hot today.
Wait, are they open? Oh
Yeah.
shoot, have they been
That's why
open
I
all
said they
day?
tapped down a
Yeah.
few bips.
Oh my god, I haven't been watching
Yeah,
at
they
all.
ran up. They ran up right after open, and then they've just been falling off.
Of course they went up. Oh, yeah, gross.
Yeah. Still
VIX is kind of
doesn't
up. That's cool.
still doesn't look very good. VIX is always up on the weekend. That's how I make my money. I just go long VIX futures on Friday, and then I make money. it's fucking super consistent.
Awesome.
Yeah.
I'm already loving the SPX channel feedback on my prediction.
Are they freaking out? That's the benefit
yeah,
of the prediction, is that you get to freak out everybody who's holding a put right now.
I get to see their reactions to my absolutely insane price target for the end of the week. If you buy $5,000 calls off of this, I think you need to like retake a grade school and honestly go see
Say
some
that
sort
you're
of
just basically guaranteeing that only the biggest morons who actually buy those calls are the ones who make money this week.
That's true.
That's what all I really want. I mean, all this other stuff, you know,
You know what I've
prices,
enjoyed
all
for the last 5 weeks? Bulls buying 4,800 calls every weekend and never seeing them go in the money. That has
Yeah.
brought me infinite joy.
All I really want to see, and you can figure out whatever this looks like. It can come in many different flavors. I just want stupidity to be painful again.
Yeah, we've kind of removed that with modern medicine as an evolutionary
And modern
deciding.
monetary policy.
Yeah. It's
Just want it to
never
hurt a little
paid
more.
better to just be completely ignorant of the like greater macroeconomic conditions.
I mean, if you look like back at the last like 10 years, like only doing the stupidest shit is the thing that like pays out the most. Just all in on retard leverage strength.
Yeah.
I
Well,
don't
that's
get it.
because that's what the market is, dude. Have you ever seen the footage of like people on like the Wall Street exchanges screaming out like share counts and stuff? I mean, that's who you're trading against and with. I mean, it's a
Yeah,
giant pile of morons with squirrel brains yelling out share prices with millions of dollars exchanging hands every time they do that. That's who you're trading with, all right? So trying to fight against them is just as stupid as they are.
I will say that is one system that I do not understand. How you can have how does that system function at scale? Just shouting at each other in a big room. Like who came up with that?
Well, so the history of the stock market is pretty interesting because so it used to be that like you had paper certificates for shares, and some guy would show up to your house in the 1800s and go, "Hey, I've got this shares of this rail company, and you should really invest so that way they can grow more, and you're investing in the company and give them access to capital." And
Why
then
do they talk like James Stewart?
eventually,
Everybody did back then.
Wow.
so it eventually grew to the point where there were people like on the streets of New York hawking these paper shares to people. And some people would like, hear a rumor and want to sell shares back to the guy hawking them and stuff. And it got to the point where like there became these nexi where people would hang out to go buy their shares from other companies and sell them when they were done holding them, right?
Oh, I see. And at some point, the city's like, we need a place for these people where we don't have to see or listen to them.
Exactly. Yep.
Yeah.
So they've basically.
There was even a big period of people selling shares to things that didn't exist. Like crypto.
Wait, so what's the difference between these people and homeless people?
Very little, actually.
Money.
Yeah, money. The drug
We've been
intake.
shouting
The
We
drug
need to get
intake
these
is
people
pretty.
off the streets. They're causing a nuisance.
The drug intake is pretty in line, actually, with the homeless population, at least in my
That's
experience.
Oh my gosh.
Somebody mentioned a 80s Bond floor trader earlier, and all I could think about was like listening to any of those guys talk is just like listening to like somebody who's been like addiction treatment for like 30 years. They just ramble because they can't form coherent thoughts because of all the cocaine.
I love it. Well, burn it all down. I'm ready.
I'm
There's
ready
that
to-
dude that sold shares of KO in the Midwest and made a cluster of millionaires way back in the day. Yeah, he just went to like door to door to some fucking town in Florida, and they all became millionaires from their Coca-Cola holdings.
So American. I love it.
Yep. And you know, all of this trading activity. Remember, everybody, all of the things that we discussed today are part of a market that helps businesses raise capital to raise the productivity and well-being of everybody in the country. So
That's the
do your
funniest
part. Do your part. Go long. Don't short America.
All right.
Uh,
I think that's about enough for today.
Yeah, I gotta go eat. I skipped lunch.
yeah, for sure. Thanks for having us on, Girk.
Yeah, thanks for coming on, guys. I appreciate it. I'll see you later.
Yeah,
Yeah,
always
good.
fun. Thanks.
You got it. Bye. All right. Did I miss any important questions? I don't think so. Michael Burry noises. When cave you to 35? How many decades do you have? Fuck off. All right. Thank you guys so much for tuning in. I'll have Pickles picks out tonight, and I'll see you all tomorrow morning. Later, everyone.